Good morning and welcome to today's live show. Just a quick note as we hit the weekly expected moves. If you need to learn how to trade around those weekly expected moves, the course is 90% off still for the New Year, New Me sale, and things have been a little bit volatile. So if you need some help out there and you're trying to learn a little bit more about technical analysis, you can get that course down in the description for only $100. And as volatility does still remain actually slightly elevated, I think that is something that you might want to take into consideration if volatility is going to come back fully into this market at some point in 2025. Remember, 2025 is going to be the year of confusion. The year of confusion. That's the word of the year, because I think we're going to see a choppy ass market throughout the year. But if we can catch some things at the right times, if we can pay attention to signals correctly, then we can catch moves already like we have been throughout the early parts here of 2025, and we've had two setups so far in 2025, and this was the squeeze that we've been looking for. And we are going up to a level where pullbacks may actually be necessary. And this is where it gets interesting, because you're finally having a day with the SPY here. If you really look at it, you're having a day here where, well, we gapped up, and this is the last time we really just saw that intraday sideways price action to create some kind of flag, and then you gapped up, and then you gapped up, and then you gapped up, and today we're actually not going to gap up. So this is something that I would be looking for. Something like this would be the most basic way to try to head higher. And then we have to pay attention to some Japanese data, actually. I think we have to pay attention to the fact that they could raise rates over there. So the yen carry trade actually could take over here, and that could put a little damper on these assets. But I wouldn't necessarily say that, you know, we've already actually seen some moves by the Fed to do some funny things with the money, right? They changed some rules. I mean, honestly, yesterday we had a very sad day at the house. Obviously, I would like to look into these things a lot further, but I just, family had a hard time, so we wanted to make sure to just kind of center ourselves and grieve how we need to, right? My wife's dog was a huge part of her life. My wife's been through a lot. If you knew everything she's been through, your jaw would probably drop. And that little dog stayed with her the whole time. So we do have the daily expected moves down in the bottom right corner if we're clicking around on other stocks. But what I'm talking about here is we've actually seen some moves from the Fed to potentially do some funky things on Friday. So we'll see if that's going to affect the yen carry trade. If that even produces downside, we're more so leaning towards what? A pullback, right? Here we're leaning towards a new low. Here we're leaning towards a new low. As we get up to here, we really see that this is a pretty strong positive trend. With the bullishness that's come in, we were always leaning towards that squeeze. Once we break out, hey, perfect stuff there. Even a gap to retest that. Oh, it's so good. So we can revert back down to the 5. And then an area that I'm still paying attention to is this gap fill right here, because it is the closest one to 590, and I think 590 would be the important level to watch. So if we're going to get something more dramatic on the pullback side, I think that 591 or this gap fill here at 591.50 or 590, you know, kind of down towards our weekly expected move would be something that I would be paying attention to. That is just one thing, though. We have gone to the top side expected move, so the likelihood to pull back from that area, at least right now, would be, hey, 68% chance to land below this line by Friday close. All right, by Friday close. Good stuff, though, and we noticed that the Qs were able to do it as well. So this makes total sense, right? Where did we say? Okay, we're going to bottom here. Okay, we go up. Okay, it's Friday. Where do you think we're going? I think we're going to a weekly expected move next week. We go to a weekly expected move next week. A retest would be very nice, wouldn't it? Wouldn't this be nice, right, as people get really, really bullish, which they are getting bullish? We've had a CPC now, closing CPC for 3 days now at 0.63, 0.66, and now 0.76. So you are seeing the bullishness over the past few days, right as we start to go, hey, things are going to back off, which just usually means that you're on the right side of things, because normally you see most people making the wrong decision at the wrong time. And this would be going long at the weekly expected move right here. This would be opening positions yesterday is not the best move, right? Not the best move according to probabilities, according to good habits as a trader. This is just not the best move for a position trader to do. You would be looking for those little pullbacks. You'd be more so leaning towards the 2-hour pullback before making another decision. Even if you see another curl up, hey, there's always that risk, and it will come eventually. So we'll be paying attention to it. Martial Law's like, yeah, I bought volatility yesterday. You know I did. That's what Martial Law's saying. Today's stream will go out to the Tobes. Poor guy. You've been stacking. You've been kind of getting into that position. That's cool. Dollar is dropping off as of right now, right? Curling down. So if we are curling down, we will be looking for, hey, some reaction here. We do have the 2-hour divergence, and we were, I believe, able to turn up the 4-hour. But this could mean, like, intraday, we still see positivity. Maybe see one more trap to the upside because of a couple of things here. The 30-minute does not necessarily have the reversal signals that we want to see, right? It does not have the obvious signals, so this would be like, hey, yeah, there is divergence on the MACD. It's just not on the RSI at the same time, and that divergence is taking you above this just slightly, so it wouldn't be the best in the world sell signal, but usually if you're going to get a pullback, you're going to get not the best in the world sell signals, because that could be a brief pullback. So that's just something I'm paying attention to. What do I think of the BOJ impact? Well, if you really look back and you look at what happened last time, you just know the risk, right? You know the risk here, right? So on July 31st is when the BOJ actually met together for their interest rate decision, and boom, boom, boom. So 3 days of negativity. Now, this is a lot different. This is a lot different than where we were last time. So there's two real things that I think we could be aware of if things get kind of dire here, because that's a pretty big drop. I wouldn't bet anything in the market just looking back at a chart and saying, oh, they have a decision, and the last time they made a decision, it dropped. I would still be looking for the signals. Now you do have some reasons as you're at the weekly, but the difference here is you aren't in a position like this to make that big drop again to go to a new low. You're not there. So more so now, you're actually at a higher level. So if you really look at this, what do you want to do at this anyway? Well, we could see some dramatic pull back to then curl back up into positive territory if we can catch a bid. Now, the way that I think this goes really sour is if this pullback that comes actually goes lower and we start to cross down on this MACD. That's when we have to take it seriously. We still, even if that crosses, we want to be aware that that can whip back up. But if that crosses, it's a lot more risk that you're going to take out this low and actually head lower. Okay, so that's all we're reading into here. At the end of the day, that was just like looking like an ABC pattern to me. Mark, I'm a long investor, but I love watching this and trying to learn way more. And it can help you with that, right? You don't have to pay attention to the little 30-minute and 20 and 15 and hourly and 2-hour and 4-hour things that we do. You know what I mean? You don't have to do that. You can take it in and be like, oh, look at these shorter time frames, but oh, and maybe it'll convince you, hey, I see kind of crazier things on shorter time frames. But if I blow them up, it's usually pretty good, right? You'll just get into moves late, but if you can learn the little side as well, you understand why we were buying stuff down here. Because if you just play based on daily charts, well, you're going to be up in these levels. But yeah, I respect anyone who just does longer out, bigger time frames, investor over time. I mean, if you really want to make money in markets, investing has proven to be the best way. Investing has proven to be the best way. Now, if you want to make better money in markets, then, you know, people say time in the market is better than timing the market. Well, I would argue with a little bit of knowledge that you take very seriously. You can get in at better moments than most. You can look for weekly divergences, and you can know when the best point to get out, so you can kind of flow back and forth. So it's nice. 88% chance of the 0.25 rate increase for Japan. And that could go up. Isn't that crazy, Greg? That could go up immediately because they're going to get the data. They're going to get data. As far as it goes, they're going to get what? Their inflation rate. They're going to get their inflation rate year over year, and it's expected to come in at 3.2, and the previous was 2.9. So you could actually see that percentage go up. Not only that, their core inflation rate year over year, which this stuff comes out for me, I'm Central Time, 5:30 p.m. So this would be, it comes out for you, it comes out for everyone 2.5 hours after the close today, if you're in the US, that is. But here we go, core inflation rate year over year. Last one was 2.7. The consensus on this right now is 3%. The forecast is 2.9%. So I think that chance could go even higher. And a huge C wave down. The key will be, so you are, okay, is that what you would call a flat, Greg? QOB does the C wave stop. But is that what you would, so is this what you would call a flat at this point? Did I just hear a dog? Yeah, we have 2 dogs. And we actually, we had to send Toby away yesterday, and it was a very, very sad day. Okay, I'm starting to learn a little bit, Greg. And I haven't even looked this stuff up. I'm just learning from you. Oh, it was a horrible day. But the thing is, you always hope you're making the right decision. But the thing is, you know, when their quality of life is going down dramatically, it's a hard decision to make. But, you know, sometimes, a lot of the time, the easy decision isn't the right decision. And the hard decision is the right decision, right? It's very hard for us to see, and let's just use the market as an example. It's very hard for us to see this and think, oh, we need to pull back. That is an amazing amount of strength, right? It's very hard for a lot of people to do that. Now, if you've been a part of this community for a while, though, and you see this purple line, you see this top Bollinger, you see where that 5 is, you just go, oh, this is a rapid move. We might need to back off for a moment. Right? And you would also say, hey, what's the easy thing to think about doing here if we're leaning towards pullback? Well, it potentially would be shorting, right? You would be like, oh, well, this is an easy decision, shorting. But what if this is just brief and then it just turns right back up and you get ruined? So actually, the harder decision is to be patient and maybe see that thing turn back up. Now, you can do whatever. I know that the yen carry trade, I'm sure everyone's reading into that in some way. So, you know, I would just say, okay, if I'm in a short here, though, I understand that this is squeezing and we might get a little move down to go higher. So in case something bad happens, I can take a position, but I'm not going to take a big position here. That's the thing. The C wave is the longest and most impulsive move. Okay, so Google and Amazon are on the 2 best companies to buy and hold, in my opinion. I think they're great. I mean, honestly, they've proven to be great over time. There were some serious things that I was looking into for Microsoft on their on the video game side of things. Microsoft's suffering, man. Microsoft's suffering hard. AI and tech. I actually think I think this year will be the year where people wake up to AI and realize that there's not a good way to really utilize it on the consumer level to the point where you can actually maximize profits. Like, you can actually make money. Like, I'm talking a mass of people can make money from AI. We can use it for searching. We can use it to write little stuff. But right now, it just seems like people are using it to write emails and things like that. And I'm just like, I don't see it. So I do think there is room for the consumer side to be able to utilize it, but I think we just need some years behind us. So I think we could see revenues from companies start to catch up to them, and we'll actually see if that's going to happen. No, I understand that, and I'm just saying on the consumer level, right? I'm a consumer at the end of the day, and I don't see the best use for it unless I'm trying to maybe like start a business in some way. I could probably utilize it to start a business, but I'm saying, like, how would little Johnny or something use it when he's 24 to help him in his engineering path when it's known to fuck up the code a lot of the time? Right, I ask AI math questions probably like once a week. I'll have like 2 hours of just messing with AI and asking it simple math questions and probability questions. You know how often it gets it wrong? It gets it wrong like 50% of the time. And I have to correct it, and it's like, oh, thank you, that was my mistake. I made a mistake because of this and this and this. And then it's weird how it like makes an excuse for the mistake right away. I'm like, just get it right. Like, this is pretty simple. Health diagnosis and quicker internet search is self-data analysis. Well, that's another thing, MBRU. Did you know that an AI search takes I think it takes like 100 times the amount of energy to search something on Google. So you're talking energy efficiency, not very good for AI either, right? Probably because it's still on its learning path. Those are just some fun things to talk about, though. I don't think there's like bad things for AI coming. I just think that people are going to realize like, hey, how do we really actually utilize this? And the other thing is, if you use ChatGPT and you pay, I think it was ChatGPT, and you pay like, I looked at the numbers, and $200 a month, I think, for the premium thing, they're actually losing money on that at $200 a month. Do you think regular consumers are going to pay $200 a month for AI? For like good AI that you can actually utilize maybe to actually make money? The average person won't spend that. Oh, I agree with you, MBRU. I agree with you. I'm just talking about the energy efficiency of it. I'm just talking about the energy efficiency aspect. Because as of right now, ooh, it's a little rough. To search on Google, take it this way. To search on Google, it cost me a penny, like energy-wise. To search on an AI platform, it cost me $1. Let's put it that way. And that's all. And I'm saying if they can make that more efficient, it will be better for energy. That's all I'm talking about. Yeah, we're just reading into it a little bit. Hey, I'm glad I got rid of my Amazon for now. Well, I actually got rid of it before. A little bit more upside. But hey, we'll take the win. A win's a win. All right, so we are pulling back as of right now with Amazon. Not a terrible pullback, right? We do not see major things that really should make us worried here. We do see the attempt to make the new high, testing that level. John Moss, thank you so much for subscribing. Sorry for the random AI rant. Advertising service, yeah. Amazon really dropping off here at what? What's up here? Is there something right here? I think there's some right here. Maybe some Patreon members in the chat can tell you what's up here for Amazon. Maybe those guys can tell you. Inferencing comes into play, but the requirement for super chicks likely to come down to. Yeah, and I think it's all going to come down. But I'm talking about we might be in that period where people realize like, oh, it needs to come down. We have to make like, or they need more time and things like that. And I just think that we're going to go through an interesting period here. The other thing I was looking at that I actually watched something and some guy mentioned this, and I totally agree with this because I see it with my friends. I think DraftKings is going to suffer. I don't think gambling will be huge again. I think sports betting will still be around, but I think people use lower amounts. And I saw this video of a guy kind of explaining it, and I was like, yeah, this is something I've said with my friends. I'm like, you guys probably won't be gambling in like a year. And they were like, what? And I was like, yeah, I think gambling's going to go down the drain in 2025. People have low amounts of money. People are putting everything on credit card. People have delinquencies. People's housing is going delinquent. I was like, and these programs, and if you don't know this about things like this, they actually are built to make you lose. Like they are built. Like if you're actually someone who's really good at sports betting, like you prove to make really good bets all the time, they don't like that. So I thought that was interesting. And then I watched another video about it of like a comedic streamer because it like, you know, suggested me another video, and I was like, oh, he's talking about the same thing. And he does it in a funny way. But here you go, 2-hour divergence for the daily to drop down. So watch out for if that crosses down into negative territory. That would not be a good thing. That means you can chop the low. 3,100 for any spin anymore. They have subscriptions now. They have subscriptions that give you access to take shitty bets. so they have subscriptions that the benefit of the subscription is you get a discount on it placing a possible shitty bet. Oh god. Oh god. Yeah, they do. You do have this confirming, as of right now, technically you have confirmed this with the price action, with the RSI. I believe that confirmed. Yes, it did. And now you're seeing that continue. So as you're dropping below here, yeah, we want to look for little reactions and things like that in case we're wrong. But this does lead into, hey, the daily can see a roll down here. We're still at higher levels, so be open to a higher low. I feel like this would be massive. Maybe it takes its time on the way down. But this could also just hold up, you know, at the 200 again and turn back up. So 2 hour just crossing, though, we would say, hey, that needs more time to prove to us, like, hey, it can kind of solidify itself. Nvidia, I do want to check out on my other charts. If you didn't notice, the daily expected moves are down at the bottom right of the screen. If we are clicking on other charts, you can still get the daily expected moves for the SPY and the Qs in the bottom right corner. Great morning, Sofi thoughts. We will be going over Sofi. Shut up, 511? Okay, I got it. And I'm not telling you to shut up, and I'm just more like some like Mean Girls moment for me where I'm like, shut up. I'm gonna look at that in a sec because that's super interesting. Where you guys think that'll go? Nvidia, very important what Nvidia is doing right here. We have to see if it can hold up from this level. I know this is crazy, but you want to know where this wick is? You want to know where this wick is? Maybe someone from Patreon can show you exactly where this wick is. You start a cut below that, yeah, it makes more sense. 511 is the fib levels. Are you talking about SPY or the Qs? Nothing can stop Palantir. Palantir is literally at a point where it's supposed to like possibly stop. If I look at my other charts, I wouldn't say stop. Like it's an absolute loose cannon right now. It just keeps going. I didn't like the buying pressure, and then the next gap up yesterday was actually really, really good. So if you look at Palantir, you kind of look at this 2-hour chart, which we're really zoomed in on for some reason. Actually, I think it's a 30-minute chart. If you look at the 30-minute chart, you had a lot of problems until here, and you got rid of it by gapping. We've been kind of mentioning that a few times. Getting rid of something by gapping during a squeeze is a huge thing that likes to happen. Now you do have Palantir doing something absolutely crazy right now. This is where, if I'm long at the lows with the triple divergence, very, very nice. I'm outside of a weekly expected move. And so now I go, okay, this is where if I want to continue to see something crazy, I already have. If I'm still holding on to it, this would be a good area to possibly make a decision, right? Do I like the money that I'm making? Do I want to leave some runners? Bunch of decisions have to be made in this area. Short Fridays, can you do EL? Let's go look at EL, and thank you so much for the $2. This is going to be 2-hour divergence. It might not show on the 2-hour, but I'm pretty sure that will show. Either way, it's going to be on the RSI here. Yeah, so this is saying 2-hour pullback for the most part. Hold on. Yeah, a little bit of a, I would say 2-hour pullback for the most part. Now, this can be decently, potentially to be aggressive. Now, the reason that's just potential to be aggressive is because really you still have some decent volatility in this. So a snapback move to go test down in here, fill this gap would be nice. I'd still be looking for like 77 first. If we can do that and then turn back up over a 2-hour span, that would be enough to trickle you down to this level. And then you see that MACD get down by the center line and be able to curl back up. Now you have to realize that 30-minute divergence could be reversing down the trend. So if you start to break down lower, you don't see this 2-hour curl back up, or you see it curl back up and fail, right? Maybe we go a little deeper and then we fail. That's where you'd want to be paying attention to downside, right? Really just paying attention, hey, can we maintain the positive trend on the 2-hour? Looks like we're going to get some kind of pullback. And you'd also say, right, on the 30-minute right now, we're testing the 5. If this isn't going to curl down the 2-hour, can just curl back up. But this here looks like weakness to me. So I'd be patient with it. I don't like to just take a little 30-minute swing trade. I'd rather see this 2-hour pullback first and then be able to make a decision. And I think you have a very good level right here. Do you see this 75.72 actually? In the 75.72 level, it's kind of like the wick right here. Okay, well, come on now. We don't... That's a little too thick. The reason I like this level, bunch of little retests of the level, bunch of holds as resistance, holds as resistance, holds as resistance, holds as resistance, gap above, gap to here, retest the support, turns in the upward direction. So I really like this level right here. If we could get there and just see a simple curl up or even a 30-minute divergence, right? Maybe you'll get lucky and on the 30-minute you see something like this down towards that area. I think that would be great. Yeah, good. Actually, pretty solid chart there, though. Let's look at the daily. Yeah, so this is what would worry you. And this is why you want to be paying attention to if that actually maintains the positive trend. Because and I'm not saying it should worry you massively. Like, if anything, you're going, okay, high or low. And that's the point. If this wants to hold as a higher low, you know something that really ruins that most of the time. this daily curling down. This price action starts to get below all this, especially below that 50, but below the 9, below the 20, it's starting to cross over the MACD. It's starting to cross down on the RSI. That's where you would go, okay, this is not able to hold. Maybe this needs more time, or this could be, you know, flushing back down to the lows. So you don't have a lot in here to go off of. Maybe it'll just be a retest at lower levels, right? But you just want to treat it very seriously if this crosses down and if the price action takes you below. I would say 75, 76. Does that help you out, Short Fridays? Is that making some sense for you? Just want to make sure. Just want to make sure. I thought GME would see some more positivity out the gate, to be totally honest. I thought that would see some positivity because there was a video from a certain someone. Okay, awesome, Short Fridays. Appreciate you being here, bud. I feel like we haven't seen you in a couple days, Short Fridays. I know that my stream's been a little Lucas, don't get carried away. What did I get carried away with, goddamn? Are you still holding VIX? Yes, actually I am. I'm just gonna hold that small position. I mean, if we're gonna see the spike of volatility that we did, back in August, right? July 31st, right here. If we're gonna see that kind of spike, like, you know, couple $100 can go a long way. So it's just more of a risk to reward play. And the 30-minute was able to go positive. We're starting to curl down again right here. So this might mean we have some time. And I'm sorry if you hear some rattling. Bruce is messing with his bone right now. So I want to see if this divergence is actually going to hold in some way. Right? That's all I'm looking for here. And you need the SPY to follow. And something sneaky that's probably going to happen today is you're probably going to end up making a new high today. Oh god, you probably make a new high in the morning at some point. This is not based on technicals at all. This is behavior. I could definitely see us making a slightly new high in the morning here before like lunch. And then we end up seeing that big order come in at the end of the day. Remember what we said yesterday? Watch for that red bar at the end of the day, because that's something that'll hint like, hey, someone's getting out of that risk before probably the yen carry trade. I mean, Jeffrey, it's more about volatility. It's more like we have confirmed a signal. There is a shot to turn up the daily. I'm still more so looking at this. But I think as the market looks like it needs a pullback, and as we go into an event like the yen carry trade, I just really want to be paying attention to the fact that the 30-minute is crossed down. We're retesting these low levels. We're actually retesting a breakout almost of that little level down there. Almost this bar with the gap up, this slight little gap up, we're kind of testing in there. We've seen some reactions from there. If the 30-minute curls back up, okay, but this is more like, hey, this is most likely going to be a brief pullback still. But if the yen carry trade takes over, that's where the pullback can get a little bit meaner. Yeah, and that's the big thing too. So if you look back, I think that if people were paying attention to the yen carry trade back then, that's probably why all of this was happening. And then that's why it started to rebound, and then it flushed after. I think people already were getting out before the event took place. At least that's my opinion, and the opposite is happening now. So you kind of want to look at now is like how much retail is in this stuff. And you want to look at volume. Volume, what? Wait. Oh, okay. I couldn't see the bar. I was like, why is volume skyrocketing? Volume actually went up yesterday. Very interesting. So volume actually a little bit higher yesterday. But my question is, are those sell orders coming in at the top? Are those sell orders coming in at the top? So we're waiting. I think there's probably some big orders going on. There usually are as you touch weekly expected moves. And we'll just be chilling, watching our signals, seeing if volatility gets a pop. Hey, great. If not, I'll manage the trade. That's kind of what I was thinking, Dave. Like that's kind of what I'm trying to wrap my head around. I'm like, the last time it happened, people got out before it, and then it got worse. Oh, that's why I wanted to see. What are your guys' levels for it? Like what? Like if we're saying that this is the flat, all right? I know nothing about, let's say nothing about Elliot wave, but I'm guessing, hey, this is a flat. And I'm guessing at this time you're saying this is the A, this is a B flat, and the C wave is the most aggressive. Is that how I'm reading into it, Greg? I love how on my stream I'm getting taught Elliot wave. I love it. It's just a learning channel, you know? That is correct. Okay, see, I got a brain. I don't just look at squiggly lines the whole time. I can analyze other things. Okay, so what would be and how do you measure out the target? Like, what's the correct way to get the fib level for it? Because I'm guessing you're going to use an extension of some sort. Greg, charge him for the course. Yeah, Greg, I need to send you $50 or something. I know, I'm wondering the levels to do it from. Because I'm gonna end up butchering this either way. Because I know, like, the measurement too. $50. Isn't that like 0.05 cents? How would I trade my soul? I would never trade my soul. It's okay, Greg's course is on sale till February. So it's a it's a 50 USD. It's on sale for 50 yen. Whoa, the yen's about to go up though. My dude's making moves. The fib extension goes to 493 QQQ exactly. 493 QQQ. 493. So gap fill from the election gap fill. Didn't we fill the election gap fill here? We filled the election one with the SPY, but hey, that could be some unfinished business. I just don't think we see it proven in the signals yet. So I think it would be a kind of random occurrence to see a sell-off right now. I think it would be slightly random. And that's just my opinion on my side of things. But I'm glad to have another, I'm glad to have more opinions. I'm glad that we're looking into it. I think it's a lot of fun. And we're staying aware of multiple things at the same time, which means if things start to get bad, we should be like, thank you, Greg, for telling us. My beginner opinion, options tender. Options tender? This could go either way. Elliot wave is not to trade. Fib levels are likely weekly measured moves. Okay. That makes some sense. All right, what do we need to look at out there? I think we need to look at Apple. We're in a bunch of you guys holding this, and you're getting a test of the 5-day moving average, just so you are aware. Remember, you do not have any reversal signals. Okay, one thing is interesting here, Greg. We were talking about, wouldn't people get out before that news hits? Do we really think that Apple's going down because of China news for the 80th time? The same China news? I was, then I wasn't. Now I am, again. Take some meetings now. We'll come back here in 2 hours if you're still around. Have fun trading. Hey, thank you, Suri. I'm going to try to do a decent-sized stream today. We'll see if I can stay on for another 2 hours. I have to kind of weigh the pros and cons here. See if my wife gets sad. But, like, this is saying something is sick at this point. Like, you're like, something's sick. I mean, if not now, then later. Soxel? Well, so for these guys, just so you're aware, I just want to hear someone's opinion on big chunk of their sales. Yeah, but people already know about that. That should be priced in at some point. Like, people have known about that forever. Okay, when you're looking at something like this, semiconductors, anytime you're doing a 3x leverage, look for the actual thing that you can pay attention to do some analysis. It's very difficult to do analysis on these type of stocks if there's any kind of decay in it or anything. So if you just don't want to mess with that, I just go over to this. And this is the bullish one, right? So XL, so bullish. Okay, I just want to double check. So what you can look at is maybe SMH, right? SMH. And then SOX S is the other one, right? Felix Semiconductor, you probably could go directly to this and do some analysis here. And you notice that this on the other chart is happening like down here. So that's just what I wanted to bring to your attention. Now, at this point, you've been in some choppy behavior for a long time. So if you can get a strong decision here, I want to see what the weekly is doing, because I'm guessing this wasn't happy. There you go. I think that this is overall saying, unless Oh my gosh, are people going to start to be like, I know with Bitcoin people are saying this, but this could be some kind of trap at this point. So that's kind of worrisome, right? So I might be looking at semiconductors right now and then looking at the Patreon and going, hey, are we at weekly expected moves? Because this might need to pull back in some way. It could reverse this down. I do not like that wick as it stands. If by the end of the week you're seeing the bar fill back up and you close up to here, I'm liking it, okay? I'm liking it, but you can see those interweek pullbacks. But I'd more so be looking at this. Because if you go into a 30-minute, it's going to be hard to make decisions. It can help you out in the near term, right? It can help you out in the near term, seeing the fact that, hey, yeah, this has gone up and up and up, and if I have a weekly expected move, right, and I know that Nvidia is outside of its weekly expected move, most likely this is at this point, well then, we can see that there is divergence forming on the RSI. So if I see a weekly expected move and I see a divergence on the RSI, I see any kind of reversal signal up here, normally I am taking profit. So this would mean 2-hour pullback is the most likely scenario here. So 2-hour pullback is the most likely scenario, right? If it's brief and it's just another 30 minutes to go make another trap, okay, and then maybe that 2-hour comes, you go all the way down to something like this, and then you curl up into positive territory, or you make structure, right? This would be a great way to head higher, in my opinion, actually. That would look very, very nice. You will need, it looks like consolidation will be necessary. Consolidation looks pretty necessary here. Here comes GME. GME, very interesting here to see this. This is what I'm reading into, Greg, with the carry trade. I know it's wild, but this, okay, I literally was talking to my wife yesterday, and I was, you know, I'm a nerd, and she, bless her heart, she hates when I do this, but she knows that I like to talk about the things that I'm researching because I'm a nerd, and so she'll let me just rant. And this time, she actually said I make a lot of sense, so I think I should tell you guys. Because usually my wife just like shakes her head and is like, I don't understand, but she's like, actually, that makes a lot of sense. So should I share that with you guys? Yeah, that's a big deal. It's a big deal. This makes sense with the yen carry trade. Now, why does this make sense with the yen carry trade? Because of the random sell-off. The random sell-off makes total sense now to me. Right? Yes, we had the sell signal, but we're going into a big event a week from then, and then you go, bam, you head to lower levels, meaning these people potentially got out of positions, meaning they might have already been pricing in the yen carry trade. That means that potentially the hedge funds were using the yen to actually suppress or, you know, open up new positions with GME. And I also said to her this yesterday. I said, if Roaring Kitty tweets sometime between now and the next 24 hours, it's probably the best case scenario. Because with the carry trade, you would expect that to drop off more. But the yen carry trade puts them in a lot more danger if they're opening up new positions. And actually, 1 million shares was borrowed this morning, which means if that rate goes up, their immediate borrowing rate would go up. So I said, they'll be forced to do that. So if Kitty can tweet in the next 24 hours or we see a portfolio drop or something, that would be best case scenario. And then it happened. And then it happened. It could be a nothing burger, Greg, but I'm saying this is doing something. And this just happened and people don't know why. And they're saying store closures. Like, people already hate the business side. They hate the stores. Everyone wants to know what he's doing with the cash. So why would that force big investors to get out? It doesn't make sense. I think the yen carry trade forced them to get out. And I think they're in some big positions. They have to get out of those. That's what I think. And so you, hey, potentially get out of your hedge to the upside in case it squeezes, and you get out to the downside to force the stock down, and then you get out of your short positions at lower levels. And I said, if Roaring Kitty tweets anywhere in here, it actually can be a good thing before the event. That's all I'm reading. That's like, that is some, I guess I should probably go make a tinfoil hat at this point. But that's just all I'm saying. And it made total sense to my wife for the first time ever. So I would say this, if this daily chart ends up curling up, like tomorrow, I'd probably be really watching next week. Did a Roaring Kitty tweet? Yes, he did. That's way over my skill set of thinking. Well, it's pure speculation, Greg. This is pure speculation. That's why I said I need to go make a tinfoil hat. This is pure speculation. Well, for the SPY, all you need to know with the SPY is certain stocks that are owned right now, if they're owned with these loans from, like, say, they're potentially using the yen for it, and the rate to borrow the yen actually goes up, considering it was negative for a long time. Now it's actually positive and potential to go to 0.5. If it goes to 0.5, that is a serious problem, and people will have to potentially get out of positions. They will at least have to get out of losing positions to cover their margins, right? They're going to get low margins and things like that. Every time I think I know something that makes sense, the market proves me wrong. Exactly. That's why we're going to follow signals at the end of the day. Doesn't mean we can't have some fun and talk about some tinfoil, you know? Can we see 508 today? 508 for like the Qs? For what? Wow, look at Bitcoin. And I told her, and I said, and if he tweets, Bitcoin's going to sell off. What did Bitcoin do? Bitcoin actually did, when I was talking to her, Bitcoin was still doing this. And then you get the curl up. So this is actually a good thing for Bitcoin. I was a little worried about Bitcoin here with the lower high potential there for the 2-hour trend. Now it's starting to curl back up. So that's actually very interesting. That's nice. $608. Okay, 608. Yeah, Bitcoin making this move up. Hey, look where it is, positive territory. The main thing, though, I want to look at is the 4-hour at this point. The 4-hour is still my signal to see some good things. Notice this about the 4-hour, failure to cross. That is a serious rejection, right? Now, hey, if that can cross here, you're pretty confident in saying we're going to see some kind of upside move for Bitcoin if that can cross. Which means maybe Mara is going to catch a bid here again. And look at the cup and handle on Mara. Very nice. 30-minute turns up. Hey, retest of the 5. Hey, double bottom down here. Hey, we go up to the upside. We break this high. We end up in this sell zone, this resistance zone above you. Maybe even measure something out here. Maybe you just do a messy measurement just to give yourself an idea of where this could go, right? You still want to be paying attention to signals for the most part, but that says, hey, $24 might be likely here. GME got slapped. Yeah. Yeah, it's getting pretty interesting. Forgot something. Watch out for the Trump speech at WF at 11 a.m. May move the market and break the indicators. It could. Yeah, that's the thing. 2025 will be the year of, like, holy crap, reacting to data. Like, managing risk in 2025 is going to be insanely important. Insanely important. You're right about FET being a good bid. I caught a brilliant long. Thank you. Hey, that's awesome. Thank you for bringing it up. Let's go check it out. It was the Fetch AI. Yeah, I caught a bid. Yes. Now, I don't think the signals are, like, great here, but the 2-hour looks like, hey, if I curl up, then I'm going to be really good, right? It looks like a retest of a breakout. Right, you'd say breakout area, okay, double bottom, hey, we see resistance at the high, needs to reload, goes down into these lower levels, hey, that's awesome. You have low levels here as well, and then you just reach that across with the wick and you go, oh, wow, this looks pretty nice. If that can curl back up, we'd probably beat this high and end up trying to test something like this up here. Very nice. I'm glad you were able to benefit from that universal codes. Thanks for bringing it up. Sorry, it takes me, you know, the chat moves so fast now, I have to, like, I have to, like, look over and see your chat, so make sure you know I'm never trying to ignore you guys. You might just have to, like, ask, wait 2 minutes, ask again. Yeah, and it looks like just a reload moment, right? So it looks good. Eastern time? Okay, 11 a.m. time zone. Eastern time for that 11 a.m. So that would be in an hour for me. Oh, veru. Yeah, and I saw someone mention this the other day, and I felt bad that I couldn't look into it. Now, this is just very nice. This is very nice. You make that high, and everyone thinks, okay, it goes up fast, so it has to go down fast. Well, it still can go lower. All right, we want to pay attention to that. You're making this, you're going like this. All right, so it still could go lower because that would be a pretty perfect measurement down, I would say, to where that 5-day moving average was, but you would also say the most recent breakout moment, which would be this gap right here. So you can go down and test that. But if the 30-minute curls up, you start to close above these levels, you're surefire to test this high and go make a new one. Now, this is where I would be watching out, though, because this is where you start to see 2-hour pullbacks, okay? If it does this, you have to watch out. You want this to wipe that out. You want this to wipe this out. You want this to be a very strong move for veru, whatever you want to call it. The 2-hour, you can see, has been extending to the upside for a long time, so you want to be aware that that 2-hour pullback's coming. So for me, it would say, hey, if I want to take a little play like this, I think that's likely to happen, but that might set up a reversal signal for this 2-hour to actually pull back. And that pullback can be meaner than you think, because look how high up that MACD is. Look how high up you've gone. If you really want to retest the best area to get buyers to come back in, it's actually right around here towards like 80 cents, 83 cents. This area here would be fantastic, if not a little bit lower. Yeah, 80 cents. 80 cents looks really, really nice there. But for now, you're enjoying this, right? You're going, okay, this is curled up, the price action, and I'm waiting on the lagging indicator being the MACD, right? It's just a very tiny play. So I hope you have, yeah, it's in the NASDAQ. I hope you have like a weekly expected move, and that weekly expected move might be at like 130 Friday, gap up. It could be right here though, so it could be brief. So I'd be like this. The easier play to me is you have bullish direction here. Let's look at the daily. Daily is pretty overbought too. So what you want to see is, hey, that 2-hour most likely has to make a divergence first. I think the easier play is watching this turn down and then seeing if that can turn up. And I think that's when you go, okay, now I can make a decision. We're probably going to test these levels, go make a new one, and I can make a weekly expected move for the next week. And then I just target the next week, weekly expected move. That's how I like to treat things like this that have gone up pretty quickly. Extremely grateful for your positivity and kindness. Hey, thank you so much for that. Really appreciate it. Jack Katz, I hope that was helpful. I know you asked about that yesterday. I'm sorry I wasn't able to get to it. I think I just flashed over and saw it, and then I was like, oh, and then we were talking about something else. So I appreciate you being patient for a full, almost 24 hours. Thank you so much for being patient. I do wonder if people will make moves in anticipation for tomorrow. I have a bunch of this stuff from lower levels. Want to manage company phase 2 drug to lower muscle and fat loss in GLP-1. Nice. That's kind of interesting. These ones that are in testing, is it in testing phase? Is it in testing phase? Hold on, I have a bunch of this stuff. Company phase 2 drug. See, I don't know enough about those companies to know the phases, but the main thing is, does the test work out? Like, that's the sad part. So with these types, it's kind of hard to, if you have a great price, it's kind of hard to be like, oh, we're in testing phase. If that passes, it's almost like a 50-50 event. If that passes, right, if they see good things from it, bam. If they see bad things, though, bam. So it's a rough one. BOJ likely rate hut. Yeah, I believe Greg is tracking it. I think it was Greg was tracking it. He's saying 88% chance right now. 88% chance is priced in as of this for a rate raise. But you'll get data 2.5 hours after the close. And that could make it even worse. Is it steroids? Yeah, understanding the risk is a good thing, but I mean, as long as you understand those type of plays, that's why I don't take those plays, because I just don't really like those type of plays. I don't like that it's all based on like, oh, is this randomly going to pass a test? That's kind of all. But if you like it, hey, that's okay. We can be different, right? Your name's not Luke, your name's Jack, and you like cats, and I have dogs. We're different. So if you know how to look into it, you think it's got a good shot, risk to rewards there, I'm not going to hate on you. You know what I mean? Oh, it's technically not tomorrow per se. I guess it would be technically today. I guess it would be technically later today, but it can go into effect tomorrow, which is the yen carry trade. It's just the Bank of Japan is potentially raising rates today after hours. Is filled sooner than later than the Nasdaq could diverge with the SPY. Yeah, and that's what you're looking for a major top. Truth be told, the SPY making a new high, the Q's not able to make that high, has proven to be a lot of major tops. So if this proves to be any kind of sickness anyway, well, we might see a shoot up here, make a new high, and then immediately drop. That would worry me only if the daily crosses, though, right? This is why, like, I think the risk to reward of taking a small position on volatility isn't bad. I don't think it's bad, but I'm going to use an amount that I'm willing to lose. I'm not going to try to make $1 million. You guys know I'm never in that mindset to try to make, turn $50,000 into $500,000. This is not my goal. My goal is to make, $1,000 to $3,000 a week and be happy. Even now, my goal technically over the last few months has been hey, make $500 to $3,000 a week, and that's kind of my goal every single week. As of now, I'm giving myself that lower amount because I think this is getting sketchy. The good part is that money goes a long way, actually. That money goes a long way when you see movement like this. When you catch these type of moves, it goes a long way. Bitcoin looks like it doesn't want to stop. Well, if that 4-hour curls up, then it probably doesn't want to stop. We just got to see if a 30-minute can curl up. The only thing you're at risk of, I think, here is one more move kind of like this that sets up like this. Then you see some kind of gap up and it fails. Apple resisting at 225. I don't mind Apple. It's just this. This is my problem with it. It's really close to the center line. This is actually good to see because you're kind of getting rid of. You're still in it, I would say, for the most part. I don't want to draw perfect lines because I just want to be okay, is there risk here that this can turn down? Yes. This is why I was just stating, hey, something I would like is just for it to do that. That, and I'm probably buying Apple. I'm just saying that, and I'm probably buying Apple at that level. If it does that all before Friday. Before Friday, I would say Friday afternoon. You have a 2:30 call expiring tomorrow. That's right, you have the 2:30 call. I mean, it looks like it's going in your direction. I don't think there's any real weakness, even in here. There's not a ton of weakness. It's just you have to realize that this can be the retest of the 5-day moving average. End of the month, so beware Apple. Yeah, if I buy a, some people are like that, right, Embrew? It's if I buy a call, it's going down. VIX expiration day yesterday, too. VIX on the 30-minute, the way we know, hey, yeah, volatility is scaling up, you still got to see these things positive. This is telling you the opposite. This is kind of telling you the opposite as of right now. As of now, things change very quickly on 30-minute charts, though. Hunter. I'm thinking if I want to potentially scale in again, if we see this whip back up, if we get the divergence and whip back up, or if I should manage, but buy calls go down is fine, at least you know you're wrong. Yeah, you should have 2 accounts and be have one account that does what you want to do with a lower amount of money and have one account that's completely contradictory to your trades that has a bigger amount of money. Surefire way to win. You're going to lose all the time in one side because, whenever you buy calls, it goes down. Whenever you do what you want to do, it goes down. But if you have that other account that goes always against your trades, you're almost Jim Cramering yourself. Go full portfolio into VIX. No, dear Lord, my wife would shit her pants if I did something like that. I would shit my pants if I did something like that. KULR? Ooh. KULR for 250. Ooh. At least you're taking back the 5. That's good. And you're positive on the 30-minute. But I want to look at this 2-hour. This is a lot of risk here, man. There's a lot of risk of this failing, but, you know, a lot of things that look like they're going to fail, they actually end up going up. So this is actually good that you're holding this. You kind of confirm like, hey, I'm really trying to be a higher low. You see that rejection here with the real good drop down. So you were able to save it here. So that might be for that's probably not for no reason. But I would still be aware if this 2 hour crosses, where are you likely to go? You're actually likely to test this low, I think, and head lower. And then if it did this, I'd be happy with it. I'd be happy with it. And I'd want weekly expected moves. If the daily could, no, see the daily's not even curled up yet. So you're always at risk if the daily's not really too close to curl up, that the 2 hour can drop down again. So that's how you're hurt. Let's talk about how the trade can go well for you, right? We don't want to be all negative here. The 30-minute right now is just retesting the 5. The 30-minute is reloading again before you need to break out some key resistance level. You really see this, really struggling. If you can get above this gap, you see a strong move, retest. You could just create that series of, well, let's go look. I mean, boom, 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 boom. Because you never made the new high here. So you're always fishing for the low. There's the low. Okay, curl up, good stuff. Run into resistance, curl down, retest 5. Can we break through? That's what you're going through to the positive side. Inverse Greg. Oh, god damn. You guys are messed up. You guys are messed up. Should be a new indicator. I have 5% in VIX. 5% of the portfolio. Terry? Interesting move on AMD. Let's go check that out. Once again, AMD finally showing that little bit of resistance here at the top of our zone. That's fantastic. Now, what's it doing? What's it doing? Well, the key thing you wanted to get back above was this little block in here. So what's it doing? Well, isn't it reaching down to that block? Isn't it retesting the 5? Can it curl up one more time? Will that end up being a trap because the 2 hour is a little bit extended here? Now, you wouldn't say it's too extended, though. It can go higher. But you're starting to see that cross through. That hasn't happened in a while. So I'd just be aware of that. And be aware that another trap can be set. Or be aware that this could continue to do things like this, right? If it just keeps curling up, it's going to be tough. That's why, you know, we don't condone shorting short squeezes. You know, that's why I'm using low amounts. Hey, I like to make money. Risk to rewards there for volatility, okay. But I have to, you know, realize that things can just keep curling up. I have to realize that I'm taking volatility during a short squeeze. If I put that in my head, I go, hey, instead of risking $2,500, I'll risk 10% of that, you know? Didn't take calls on Nvidia. Nvidia still probably needs to back off further than this, but it doesn't mean it can't keep doing stuff around here. It at least needs to move sideways or see that pull down to potentially 141.12, right? Pretty much at this point, we should make this a zone in some way. More of a, but the reason I'm not making it a zone is because technically this would be like an accumulation almost, like a consolidation zone. I don't think the points hold terribly well as resistance and support, but I think they're important levels. This 30-minute just crossed. I really would think this has more work to be done. And you know, Nvidia can still show you the risk here, especially as it made this extreme high. Nvidia can still show you the risk of like, hey, if I curl down, I might just chop through this. So we'll be watching. It's just, we don't know. I think 2 hour pullbacks would be the best thing for stocks here. If this 2 hour pulls back, you're probably back down in these areas. I think pullbacks on the 2 hour would be fantastic. And I'm always thinking like that because I'm going, when would I be convinced to take an opportunity, take the next opportunity? It'd probably be 2 hour pullback. Short's been liquidated. Cruel game. That's what I was thinking. So I was thinking that Bitcoin was going to do funky stuff and that Bitcoin was going to drop. And my wife was like, hey, Bitcoin is dropping. And then this move right here, I was like, hey, well, that's where I want to spread things out. The 2 hour hasn't even confirmed that up yet. The 4 hour hasn't confirmed that up yet. So now you're seeing, once again, GME see the upward move, and what do you get from Bitcoin? Some weird frickin' stuff, man. It happens every time. Every time. That's why I just connected the dots for a second. Like, it's just intuition at this point. There's no rhyme or reason behind it. You're just like, all right, well, the most likely thing to happen to Bitcoin is to see some weird price action if GME is going to see an upward move. GME saw the upward move. Bitcoin saw the upward move. GME fades. Which one's a more important indicator? Dollar, 10-year yield, VIX, or all three together? It depends on what people are mostly paying attention to. You would say the 10-year yield is most likely the most important thing. Yields are, I would say normally yields are going to be important for pretty much since 2020. Yields have been very important. Yields have been very important. The dollar is important, but you have to realize that the dollar and the yields actually move pretty in tandem. Pretty in tandem. The reason that I believe that yields are the most important thing right now is because if, for whatever reason, being that we just got bad data a few times, we got some good data, but some bad data. Some good data is enough to give them an excuse to be like, yeah, we're going to hold rates or cut them. I think they have to cut them. I think they have to cut them. If BOJ raises, I think they have to cut them. What'd Greg do? Let's see. I'm not a trader. Swing trade makes me point of court. Yeah, I'm in the same boat. Positions help me more. VIX is a ticking time bomb. Someone did say there's like potential for a 30-minute divergence on VIX, and I think you're correct to point it out. I don't think you're wrong here. I just would extend it out a little bit. I would extend it out to an hourly. I think the hourly looks a little bit cleaner here. You see that MACD? So it just shows you how we could go make that new high and then see this thing whip back up. And this is why I'm thinking of doing a scale in at some point. But you have to be aware that this is squeezing. We could easily just end up to 12.12, and this could all be a bust. Now, the dollar is what's interesting. I mean, look at those hourly divergences. What's that telling us? Well, that's telling us 2-hour divergences are there. What's that telling us? That's telling us the 4-hour could curl up. Now, the 2-hour looks like what? It's retesting the 5. It could drop down one more time. But this is telling us that the 4-hour can curl up. The 4-hour is curling up. So this means we could see a rebound here to potentially like 109, 108. 108, like 108.80, 109. Does your wife trade as well? No. My wife bought she bought like two shares of GME like months ago, and then she bought like baby Doge because she thought it was cute like 2 years ago. And that's it. That's it. Like, that is it. So, I wouldn't trust her analysis too much. One thing for the dollar that I'm kind of seeing here. Anybody else seeing this for the dollar? You see this floor? See this? See this? This is kind of that pullback into a boom, a new all-time high scenario, I think. Because I want the dollar to get down to 106.49. That's where I really want it to get to. Or at least breakout area. There's probably a little zone in here. That looks interesting if we make the right shoulder. One thing to pay attention to, housing. Housing is down as of right now, and high yield growth. I'd be paying attention to this as well. The 30-minute divergence on high yield growth, we're starting to get to that 5, so maybe that reaction goes up. Holding really, really well here. Your 7th, you drew what you thought the SPY might do. I roughly copied it on my chart. It's almost exactly what you drew. Really? Hey, that's dope. Hey, sometimes we're right. And the thing is, I want to be like, oh yeah, that's the only scenario we were talking about. Because that would make us look like geniuses, wouldn't it? No. We talk about multiple scenarios, and usually I've done this for long enough that my intuition can find those scenarios that are very, very likely to come up. And that's the truth of it. Am I going to get it all the time? No, it's impossible to get it all the time. It's impossible to get it all the time. That's why if you take a loss, and stuff like that, we're always paying attention to the risk. That's the big part. You got to be paying attention if that scenario didn't play out. Now, the scenario I'm wondering is, are we going to do this and look scary, or are we going to back off right now and look okay? Because I think this would be okay. You're just retesting. I don't think that would be that bad. And then that would lead into the 30th, which on the 31st, we get rate news. So if BOJ messes with us for a few days here, we end up lower. And then on the 31st, the Fed comes out and says, yeah, we're going to cut those rates again, which I think they have to if BOJ raises. That's my thought. It's my intuition kicking in. But hey, we'll look for that reaction. We'll look for signals. But if that would all happen, you'd be reloaded at a great area, and you'd get the hype of, hey, we're still cutting those rates. So, your wife should buy some Melania coin. No, but I did message my friends in Japan to let them know about, not jazz me, but I did let them know about the yen carry trade. They were like, ah, crap. They're like, we love it right now because like they can buy, they literally get lunch every day for like $2.50. Like they could go eat out at lunch, like for lunch, like go pick up lunch every day for like $3. Like it's crazy, but it's like, since they've been living in Japan and the things I've heard, I'm like, Japan gets like, as far as monetary benefits, like if you're like a foreigner, like if you have USD, you get the benefits while we pay for all the inflation over here. And now they're starting to see inflation. So I haven't looked into it enough to really see, but I was just like, hey, your yen might get more valuable. And she's like, no. Do you think Trump's speech and Japan interest could tank the market? There's always potential. Do I want to risk money based on something like that? ABCD. Like, do I want to risk money because there's potential that someone could say something bad and that could be bad for the market? Or do I want to see if signals are proving that, hey, we're at a high level, we have some divergence here on the MACD, a pullback seems very likely. Those are better things to pay attention to. We're at a weekly expected move. You know, things like that are just better. Your wife was a secret bag holder? I hope. She's not. I've looked at her. She just has a little Robinhood account. I've looked, and she was like, my GME's worth like 60% more now. And then that big drop happened. She goes, I'm back to break even with GME now, or something like that. I don't think it was 60%, or it was like 20%. YCL. Let's go look. The yen, I mean, if you're trading the yen, the thing is, if I'm trading the yen, this is a very, well, you should see strength. If they raise, then the yen should get stronger. That's the only thing you need to read into with the news. What do I see from this as of now? I mean, this is a 30-minute chart, but you're kind of seeing this, right? And it's kind of choppy. There's not a lot of liquidity here. So just be aware of that. If there's not a lot of liquidity, I would be staying far away from options. On the daily, though, yeah, you can kind of see this. See the divergence before the event. Awesome. See the reaction before the event. Awesome. Like, people are starting to price it in, but if it's, hey, they're actually going to raise, that could react back up. So I'd be looking at my 2 hours, seeing if that can just curl up. But there's just not a lot of liquidity here. That's why you have choppiness in the bars. Done trading options, never again. Hey, that's a great place to be. Daily victory, that's a great place to be. Trade the shares. Make money over 10 years instead of trying to make it all in one. That's all the difference is. It's make money in 10 years instead of making it all in one. And then you can do something on the side because you'll have a little more time because you won't be staring at options and worried about time all the time. You can sit there and you can go, okay, what do I think this is going to do over the next 6 months? All right, cool. I'm going to do that. I'm going to not do that. I'm going to save money for 6 months. I'm going to be patient. Okay, now I want to see that go out. Okay, cool. I see a good signal. I'm going to invest in that for 2 weeks. Maybe I'll check in on it every other day. You know? It's great. Once you get to that point, if you like fail in options enough, and if you can get to that point without losing everything, that's the best scenario. But yeah, you'll realize that investing or like just trading shares is much safer. And you can still make great percentages, right? If you took the trade here and you didn't want to worry about options, hey, you're up 4.29% in a week. That is very, very good. If you can do that consistently, maybe not week by week, but maybe every other week, you're probably going to end up beating potentially every single person doing options. So, oh gosh. Yeah, I'm sorry to hear that. It sounds like you might have got beat up, but I'm glad that you're like, yeah, I'm glad you're still here. I'm glad you're going, how could I change based on my accountability? And I think that's a great thing. I invest in RGTI. See, you're looking at good stuff too. I don't think RGTI is bad. I haven't looked at the signals yet though. Will drop, and what are the most important prices to watch? The most important prices are always on my chart here. These are the most important prices. You can't convince me otherwise. The red lines are important for the day. The purple lines are important for the week. The yellow lines are important for the month. What's the most important level, I think? I still think 590 is your most important level for the most dramatic pullback. But you guys know me. Do I really care about the price, or do I care if like these things are curling up? If these things are curling up, if I'm at a daily expected move and that thing curls up. That's what I care about the most. I can tell you right now, we don't have a bunch of implied volatility for today, but we probably will see some big implied volatility for tomorrow. So today might be the day to make decisions. Which I'm going to make a decision. Make a decision here. Let's see. Little double thing here. And that's pretty deep, but look at that divergence there. 15, is that still really positive? No, it's not. That's unfortunate. You're kind of at risk of going like this now. And then you see that divergence pop up across. So this one might be, I have to wait a little bit. Let me see, dollar starting to increase. People still started out the day, it looks like on the, right here. 9 a.m., 8:45. 8:45 started out at the low end, went to the up end towards 0.82, then coming back down. So now you're seeing this though. I want you to be very clear what's happening here. If you look at this, I don't like to do technicals on this, but if you're going like this, a low, a higher low, I mean, you would say this. Okay, hold on, let's really do this all the way out. A low, a high, right? A new high, a higher low than this right here even. And now you go like this. When you really want to pay attention, when people start to go to the bear side, you want to pay attention when they start to go, because that usually is like a sign of, hey, okay, now we're going to back off. The sentiment is changing. And then it's when you get up here and people start to pile in and then that crosses back down, you go, hey, we might have bottomed, right? Bottom. Now potential for, maybe a short-term top is what I would say. Now that's reading into a lot. The yields are going higher. IWM probably doesn't like that. IWM is down by the 5. That's good. That's good. And a handful of other sites growing, always growing. Exactly. Just always making good decisions. If you just sit there and you say, hey, everything in the market, let's break it down to this. Let's break it down to this. Did you know how simple trading actually is if you really think about it? Really break it down as simple as possible. All you are doing is two things. You're choosing when to buy, you're choosing when to sell. You're choosing when to buy, you are choosing when to sell. Isn't that crazy? Like if you really dumb it down, you're buying and selling. Your job is to figure out the right time to make that decision, whether to buy or sell. That's why we were talking about the decision to buy. weekly expected moves gave me the decision to sell. The divergence to buy with the 2-hour divergence. The weekly, we get there very quickly. It gives us a reason to sell. Now what happened down here? A reason to buy. A reason to buy. With the 2-hour divergence across. Now what do we have? A reason to sell. Right? If we just really take it very, very simply, that's all we have to do. And this is why options can hurt you. Because you might have the decision to buy, but when you take options into consideration, you have to say, I want to buy for a certain amount of time. Time comes into the equation. This is why I tell people a lot of the time why I, in my personal experience, started to extend out my expirations. Because then I can easily just sit there and reach the point to sell. And feel very confident with the amount of time that it may take to get there. And I can take profit on the way up if I want to really be risk averse. But that's all it is. That's all it is. Right? Yeah, we didn't talk about price once, did we? We didn't talk about price. I hate theta. That's so base. So we didn't talk about price once. It's just, hey, this is something that says I should buy. Hey, this is something that says I should sell. And if I find those things that I truly trust to tell me those, if I find price action that I really trust to tell me to buy, if I find weekly expected moves that really tell me to buy, if I find weekly expected moves that really tell me to sell, then trading actually becomes way simpler than you think. Did you know that some people don't use lines, they don't use levels, they don't use anything, and they purely just go off of, this went really, really high up really fast. I'm out. This move was pretty good and it just pulled back. I might get back in. Like, that's literally what some people do, and they're more successful than people that are staring at lines on a chart all day. Because they just know, like, hey, yeah, this doesn't look that bad. Crazy. APLD. Yeah, we'll look at APLD for Dad. APLD, I'm worried about it, to be honest. The 30-minute divergence, it's just kind of, it hasn't had that real breakout moment. If it does, I think that changes it, but you're just at a lot of risk that you're kind of seeing some kind of wedging here, which means price is probably getting tired. It doesn't mean we can't see the breakout moment where you just gap up and see something crazy. That's what I think it needs, though, and I don't really bet on that. I'm more saying, hey, this 2-hour might curl down. The 30-minute seems a little tapped out here. Those divergences are getting pretty steep here, right? Looks like earnings was a lackluster thing, then a good thing, now it's a bad thing, now it's a good thing, and now you're going, okay, what the hell's going to happen? If we close below the 5, I'd be worried about a drop, a little bit bigger drop. Do I think it's something to really worry about? Well, the daily just curled up, so I'm pretty happy with it, right? We have the potential for a double bottom down here. So am I like bearish on this by any means? Probably not. If this would start to cross through all these, then would I be bearish down to here? Yes. That's what I would say. Now it happens though. That's just a squeeze. That's why I kept saying we're in a squeeze, we're in a squeeze, we're in a squeeze, we're in a squeeze. If we're gonna do something here, I think one more move to the upside actually would be like a great little trap. Oh, everything's going well with your home. It is going well, Orchid. It was a tough day yesterday. I'm a pretty, overall, you know, I used to be a pretty pessimistic, I'm a pretty positive person now. And so what I just said was, I'm not looking at charts all day. I'm not working. My wife needs me. That dog means a lot to her. And so I made sure to give us a great day. And we just had a great day doing exactly what Toby would want to do. And that's why yesterday was such a conflicting thing. It almost makes me sad thinking about it. God dang it. Because, like, it was such a great day, and then it was such a bad day. But yeah, I told her, and she's like, hey, thank you. You didn't have to take off work. And I go, here's the thing. At the end of the day, if you need me, I'm there. At the end of the day, this is money. Who the fuck cares about money at the end of the day? At the end of it all, do you think you're gonna be sitting on your deathbed going, man, I wish I was holding my money right now? Probably not. You're probably gonna be like, wow, I wish I was holding that dog that went through such tough times with me. Man, I wish I was holding my daughter right now. I wish I was getting a hug from her. Oh, I wish my wife was here. That's what the important thing is. Sorry, sad day yesterday, so you might be catching me on a heartfelt stream. Trends your friend till she throws your shit out the window. Go watch the new season of Temptation Island. Oh my goodness, that was crazy. That was interesting. VVIX trying to cross down here. The volatility of volatility actually saying like, hey, we might not be seeing some kind of pop here. I thought that was interesting. Little tiny like head and shoulders slanted here. Till she throws your shit out the window. And this is what is at risk here, right? This is why I think the hourly chart is kind of your friend. If you see that start to curl over, you can go to deeper levels, and we're probably just going to continue this squeeze for a bit. I'd watch for reversal signals at this point. At this point on the SPY, I'd really be watching for this. Something like this, I think, would give you a hint. If we do not see this part, right? This part down here is very important to see, because if you do not see this, then this isn't going to happen. If you do not see this, then there's no chance. If you see this, if it never curls back down, it's not going down. Keeping it very simple. But do I still have more reasons to not hold on to long options here than to hold on to long options here? Yes. Fucking chop box today. I know, Kalani. A little choppy out there. Actually, the direction's just been up. I don't think it's been too choppy. I would like choppy. I would like more choppy than this. Let's put it that way. IWM, give me 1 moment here. Friggin' eye is itching. All right. IWM, looking over at that, I don't think I have the correct levels on here. I do have them on my other chart, so I'm just going to pull them up. IWM, very important. People on Patreon, you know what is right here. I'll show you what's right here. How about that? Since we have a purple line right here, we'll show you what's right here. Wow, okay, so do weekly expected moves help you in making that decision of when to buy and when to sell? Wow, I wonder if they do help you. I wonder if this helped me in making a decision if I was holding on to IWM. And I wonder if this helped me with TINA, right? I talk about how to use TINA. TNA. I'm using something like that. Hey, well, when IWM hits this, might help me make a decision. Now, what's going on with IWM right now? Well, I have a divergence, all right? I do have that. I see it plain and simple right there. Rather flat, though, on the RSI, isn't it? So if it's flat on the RSI, I should be aware that a retest of the 5 and some kind of trap setup could be likely. That would do this right here. Then you might actually see a significant divergence on your RSI. That's more significant than over here. There you go. That's it. 2 hours crossing. Is that a negative bar? It is. If you need some help, read up here. Hold it over, read negative 0.41. I don't care that it's green. I care if it's a negative bar or a positive bar. Now, do I want to see a negative bar that like gapped down to here and then wicked all the way up and it's down 0.01? It's down 0.1? Probably don't want to see that. So if this would complete in 50 minutes, I could take a position. What do I need to do right away? I need to be making sure to managing my trade. We're right at the 5-day moving average. The 30-minute is in positive territory. It could just curl up. I would need to manage risk and then actually see a sell, a great sell signal fully outside of the weekly expected move. I think that would be fantastic. But the reason that we manage risk here on the 30-minute, if I take that 2-hour trade and the 30-minute curls up, and the reason that we manage risk is because this is not guaranteed at all. This is not guaranteed. This could just go like this. Wham. Wham. That's why we pay attention to risk, right, in our trade. It's great. Once again, just reasons to buy, reasons to sell. That's it. We don't post my plays exactly. I'm not trying to encourage anyone to do exactly what I do because I'm not live all the time. I'm not updating all the time. I'm not trying to convince you like I'm a perfect person. Sometimes I get out of plays just because of a gut feeling, because of intuition. So it's like, if I was a financial advisor and I had a camera on me at all times that could tell you exactly what I was thinking at all times, then I might post my plays. But I do post potentially good setups, and we do on Patreon go over a weekly update video talking about stocks as they approach weekly expected move, and we talk about potentially good setups. But at the end of the day, I'm trying to teach you how to be a good trader. Being a good trader means holding yourself accountable. And if you're following someone else's whole thing that they're doing, you're not trying to be a trader. You're trying to just be a follower. And I'm not saying that in a bad way. I'm just saying to be a trader, you have to understand the decisions that you're actually making. Because unless that person is live all the time with a camera on them, telling you their thought process at all times, you potentially can lose money following those people. I mean, genuinely, like I don't want to talk, badly, terribly about other YouTubers, but all of the GME traders who have you follow every single trade, they said that we're mo-assing from here. And I said, hey, yeah, that's potential. We're at higher levels. But I go, let's pay attention to the risk. The risk, the risk, the risk. It happened. The risk, the risk, the risk. It happened. And then bad things happen. So what was more useful? Me posting my plays to you guys, right? It was the people posting their plays saying, yes, this is going to moaz and this is good stuff. Because that's most of the people that actually post their plays all the time. Or is it more useful for you to be paying attention to both sides and then making a decision? That's all I'm getting at there. I've been making good plays with the Patreon. Exactly. The Patreon is there to give you good tools to use to take trades. And then we discuss them in a weekly update video, and we'll point out good plays so that you can understand what a good play looks like, but you don't want to think, oh, this has to play out. I know that a lot of things that I mention end up playing out. I would say more than 50%, let's put it that way. But that's because I've done it long enough and I'm posting the plays that I see as highly probable. I'm talking about things that I see as highly probable. So it makes sense for them to play out more often than they don't. One of the ones that didn't play out, let's talk about one that didn't play out. Apple. Apple did not play out. Apple had a 2-hour divergence. And what did we keep saying about Apple? We said, hey, yeah, that hourly chart, it can make you make a decision. You just got to really understand. We kept saying this over and over. You have to understand this is one of the riskiest plays that I found. But it has very good reward potential. The risk here is not a ton, but you see what happens when that goes the wrong way. The risk isn't like massive, but it's enough to ruin an option. But this is one that did not play out how we wanted it to. But what were we paying attention to? The fact that it was a very risky thing. And still, to this point, it is a risky thing. You do not have the structure here to really convince me like, oh yes, we have bottomed out. Nothing is certain until it is. Nothing is certain until you look back. That's why I like doing live video with you guys, because I can prove in real time what I'm seeing. If I was just someone making YouTube videos every night, I can just look back and tell you what happened every day and convince you that I'm smart. But if I do it live, you can actually see like the things I pay attention to, and I think that's way more useful. Way more useful. Pinky fingers up today. We keep bearish, bullish levels. No, we still pay attention to a few things. Okay, so on Patreon during our update videos, just so you're aware, we do tell people about the risks of in this area, right? And we really discuss that, and we talk about the structure of how the risk could end up playing out. But this is very simple, and if you've been a part of Patreon, you probably get this now. Hey, what's the risk for the week? Who can tell me the risk for the week? What's the potential, I would say, reward for the day, and what's the risk for Friday? I just drew it out, but so we'll just go for it. The reward for the day is this curls up, you're in a positive trend, you end up towards 609.75. The risk of saying, hey, for say till the end of the month, we're going to end up at 620. I know a lot of people talking about 620 and 630. By the end of the month, we're going to end at 630. Well, what's the risk right here? We haven't pulled back in a long time. We have an extended RSI. We have an extended MACD. And for the week, the reward is here. The risk is here with the highest percentage chance. So my reward is this. My risk is this. These are the type of things that we really talk about. And then we talk about structure around these things to see if there's any kind of setup. And we really just talk about that to really display, to really show you, like, look what could happen by Friday. It's not happening. Do I want to short this? This is a short squeeze. We talk about that too. Is this a good time to short? No. I mean, if you're going to make that decision now, technically it would be a good time to short. It's just the better question is it a good thing to short a short squeeze? Really think of that sentence. It's not. It's not a good idea. It's not a good idea to short a short squeeze. What am I doing? I know that it's not a good idea, but I want to buy volatility going into the yen carry trade just in case for fun. And I'm like, okay, cool. Well, mainly for fun, I would say, but mainly just to see the reaction. And if I can catch a good risk to reward play here, I think it's there, right? But am I doing that with thousands or tens of thousands of dollars? No. Humans are bad at risk to reward thinking. Well, that's because no one's thinking about the risk to reward. The reason that my friends message me here is because they want a play that has low risk. And they think that a low risk play is when a lot of people have bought something already. Mentally, if you're new to looking at charts, it is very hard to buy stocks here because you are down. It seems scary. But if you can get to a point where you look at charts enough where you start to flip that, then this starts to look scary. This starts to look bullish. Exactly. Okay, actually we can do this. How many people messaged me about Trump coin? How many people messaged me here? How many people messaged me here versus how many people messaged me here? No one messaged me here. No one messages me here now. No one's messaging me right now. And look at that. No one's messaging me. Low or high, or high or low, sorry. High or low. Potential, curling up. No one's messaging me right now. Everyone messaged me here. And that's the truth. I could show you my phone. Everyone messaged me here. I had 3 people message me here, 0 here, 0 here. Isn't that crazy? It's because they want something that is proving to be good. But they don't know when the good timing is. They think that, oh, I need to go in when everyone's going in. This is good. When the real people go, hey, this looks nice. I like this. Big buy comes in, momentum triggers. Okay, we head to the upside. Then they take profit right as people start to message me. It's truly like a backwards game. I think so. I think your 30 minutes suggesting that. You don't have reversal signals on both indicators, so I think you have to be open to this. I'm worried if we tag that monthly expected move. Well, it's actually learning to follow a different psychology. What is a good opportunity? You know, and really understanding what good risk to reward is. People see this and they go, oh my gosh, there's so much reward. They could be right, I don't know, but I'm just saying, They say they see all of this and they're worried. They're worried. They're worried. They're worried. They see this. They go, okay, now I'm going. Okay, now I get it. Now, oh yes, we're gonna break through this. Yes. Without being like, this was the actual trade. It's just, you have to retrain your psychology to be like, is this a great opportunity right now? This was. This, very skeptical. I know, I'm going to stay on for that just to see. Just do the opposite of the herd, not complicated. Life in general works well for me. Yeah, and that's kind of the mental thing. Remember when I just said earlier, like some people do that. Some people literally look at the news, look at fear and greed. They buy when you're in extreme fear, and they sell when you're in extreme greed. Some people do that. That's kind of wild. I'm inclined to believe that we are still very positive. We are still in a short squeeze and nothing has happened yet. Nothing has happened yet. We do not have reversal signals on the SPY. I believe the SPX 500 got rid of our reversal signals on the SPY. Still holding flat. So I want to see a little divergence here. That'd be great. I'm fine with that. Yeah. I just don't think we have, I don't think we've given the signals of pure weakness here yet. I think we might be out of gas. The only thing that I can point to at this moment is volume. Like, I don't look at volume very often. You guys know this channel. I don't look at volume very often, but I will start to look at it here. And this is what's tripping me out, is yesterday we actually saw volume pick up, but we see the wick. So I'm wondering if the sellers coming in is what pumped that volume a little bit. Which means what? There's potentially sellers in this area, sellers in this area, sellers. This is a, I don't think you understand. This is a pretty damn heavy resistance here. Look what happened last time. It's like, this is a pretty heavy resistance here. And so if we hold that as resistance again, you'd expect a reaction. Now, it doesn't mean it has to be this, right? But it could be something a little bit more brief. As of right now, it looks like you're building the potential short-term top. You're just building a trend top, is what it seems like to me. Of course, Outcast. Yeah, I'll try to get to your message always, you know what I mean? It's just, and now you have levels to pay attention to. So if this goes like this, you're likely to get to here. That would technically be a new all-time high. That'd be a big narrative before some big BOJ news. You could actually go all the way up to the monthly from this. STAI bought a nibble today. What is you guys always bring up this type of stuff. Let's see here. Scantech AI Systems. What the heck are you? First of all, I mean your AI systems. I get that. Engaged in the innovation, emerging technologies, and machine learning experience, especially in developing advanced screening technology that provides the most accurate and fastest detection of prohibited materials. The company was founded September 5th, 2023, and is headquartered, very new. Very, very new. So I don't think it's bad to pay attention to something, you know, relatively new. So this would be one where charting's just not going to help you unless you're able to find a chart with more than this, but 2023, you don't have a lot to go off of. You just see dramatic downside. So this is where you'd have to really reach into the company, see who's in charge, see if it's people you like. You know, for the most part, you would say, hey, yeah, this could, I mean, this is one of those ones where my dad's buddies who go like, yeah, we just always have like $10,000 and every year we throw $1,000 into a stock that we like. They would probably look into something like this, right? That's their high risk kind of thing they like to do. Remember the guys that we talked about, though, sometimes when it's at a sell, they just buy it. So it's up to you on this one. There's not a lot of technicals to do here besides like, hey, the 30 minutes in a positive trend now. And the 30-minute curls back up, you're positive. You're retesting the 5 and what moving averages you do have. But as far as like short-term plays, this is going to be difficult. You have to look at this seriously as an investment and look into the company, look what they're doing, see if they produce good numbers out the gate. That would be a good thing. Sofi, that's right. We wanted to look at Sofi. What is the SPY? The SPY is a buy. Almost a strong buy. SoFi was fantastic. SoFi has just been so good to us, man. I love the setup. It's so good. One thing to note, we were pointing out the fact that no divergence on the MACD or RSI here. So what could happen? Hey, we could see that little curl up. We could see that little curl up. Or if we're not going to curl up, we're not going to make a new high here. What if the 2 hour just crosses down? Where are you likely to test? I think you're likely to test in here. You see these very obvious levels. Boom, boom, boom. That would be great. As this is a very big move, I think it is probably worth to pull up a fib level at this point. Yeah, we'll do a rough one. Yeah, and so you're pretty much like this. Look where this line is here. Hey, this looks good. Gap fill here looks nice because you're in this area. Okay, awesome. The next one would be, I would say probably this area right here. Guess what? That's where golden pocket is. Now, I think the worst that this can get is you end up down here. You see a dramatic pullback, right? But this is a very positive move. So am I just like, yeah, this is going to crash down? Well, what would tell me if it's going to crash down? At least at a higher probable rate. If the daily crosses down. If the daily crosses through these moving averages. I want to see all three for this because this is a strong move. I want to see a close below the 9. I want to see a close with the MACD crossed over. And I want to see this crossing through that center line. That would convince me SoFi has a good shot to test the lows, maybe even make a new one. And SoFi went great right down to our breakout area. So that's fantastic. So the last time it saw a big upward move, it came all the way back down to the breakout. So if we see a big upward move, be open to that coming all the way down to the breakout. That's all I'd say. I think it looks nice. I think the 30-minute has a chance to make another move higher and give you a point of divergence, and you're outside of a weekly expected move now. So you know the risk, you know the reward, and now you have to make that decision. Buy or sell, right? And you have a weekly move up here, so. Good stuff, though. I like it. SoFi has earnings next week. Yeah. And it's pumping before earnings, so if I caught that trade, I'm pretty happy, and I don't have to play earnings, which is overall a 50-50 flip. Or does the UVXY have a bullish divergence? UVXY, Andrew, do not do too much technical analysis on UVXY. It can look like it works out, and it will work out sometimes, but it has so much decay in it. And volatility, overall, this market is most of the time bullish, so volatility is normally trending down, or at least remaining at low levels or going sideways, which just means you can get ripped alive. And so you more so want to do your analysis on VIX, because VIX doesn't have decay. VIX is just a reading that you're trading off of. So we see VIX is dropping down a little bit heavily here. Well, what were we paying attention to? Well, if the hourly crosses, that's a bad thing. We can go lower and make that new high in the SPY that we're talking about, and then we'll pay attention to resistances up here. Getting schmooshed. EA. It's in the game. Right? Something like that. RKK. Not one of my favorites, but yes, we can look at it. First of all, gotta look at this thing over time. Yeah. Yeah. Always be wary of the people that tell you they're a genius. Because they might not be. They're still holding on to stuff like that. Okay. For this, 2 hour able to confirm up, solid 2 hour move so far. And some good signals here. Like, let's not ignore the fact that this had good signals. Boom, boom, boom. Let's not ignore the fact that you actually got the divergence on the MACD and RSI at the same time, but you had triple divergence on the RSI. This looks like a great trade. The daily is going to confirm up. It confirmed up. So where do I need to break through? Right here, these highs. Very obvious, okay? I need to break through that. Is the 2 hour overbought at this point? It's getting there. It's getting there. So what would I invite? Well, as this is a pretty good high here, I would like us to go a little bit higher, carve something out, and end up making something. Make some kind of pullback here, as this is the start of an actually very positive trend so far. to curl down and curl back up. And then pretty simple opportunity, I think. If this would drop down like this and it curls up and you're on a Friday, see how that would curl up on a Friday? You could make a weekly expected move here, and maybe that 2 hour just shoots directly to the weekly expected move, and you have an easy, hey, chance to potentially make a decision to buy or sell, and then a chance to make a decision to buy or sell. I think if that's set up, I would like the trade. It'd just be a swing. And maybe you'll even see a little 30-minute divergence in here because we've been pretty bouncing back and forth. Yeah, that's why you probably heard in my last YouTube video, I was like, I'm not an expert in the yen carry trade, but I'm looking into it. And I go, I'm not going to be someone who tells you I'm an expert in everything. I'm not. But if you can find something helpful from me, then I hope that we can make a relationship here, and it'd be awesome. Good old Kathy. She's let's look at Path, because I think UiPath's like not terrible. It was just terrible when she bought it. It was just terrible when she bought it. That's the thing. You know, the genius bought it here. And I'm not talking badly about her. People make wrong decisions. That's fine. Like, I'm not trying to talk. I'm just talking about the trade. It was a bad trade. This is why you don't do things before earnings. And you can learn from someone who's managing a shitload of money over at ARK. This is why you don't take trades around earnings. That's why I don't. I can always make a decision right after, but she had a FOMO moment. That's what that is. She had a FOMO moment. You know, that's what it seems like to me. She was like, oh, this earnings is going to be good, and we're going to make so much money. That's probably what happened. I don't think it looks bad, SH33, and I think she has the opportunity to come back. The thing that you can always know about these people who have access to big amounts of money is they can always keep dollar cost averaging. They can always keep buying and buying and buying as things go down. For Path, though, something like Path, you actually had some signals that say, hey, we could head to the upside here. And then you carved out this little higher low. So that's interesting. I think if the 2 hour crosses down, I'm not happy with this, though. And then Palo Alto is another one that I could probably look at. Been adding some S-ARC positions. Yeah, so S-ARC positions as well. Like, as long as you're realizing, like, especially if you have weekly expected moves for things like that. And I would pay attention to what they're actually holding. SH33, like, what's their biggest hold right now? Do you know what has the biggest percentage of their holdings? What stock? Whoa, what just bounced up? Worked at ForestX for nearly 5 years. Yeah, well, I'm more inclined to ask questions of how much, like, are you able to see how much people are borrowing, and or are you able to see any of that information? Because I want to know how much is at risk here, if from like that standpoint. Right, I want to know how much this can actually affect the market. I want to know if those positions are underwater or something like that. What if one of those trades are going wrong and they're still borrowing money to potentially just dollar cost average in some way? Yes, but only heavily delayed info. How delayed are we talking here? Like a month? When it comes to gap fills, do you just target a price anywhere in the zone? Not necessarily. So like for this, like say if we were gap filling, okay, the main thing I'm paying attention to, the red line, right? But if I see a gap fill, I'm immediately gonna go, hey, it's very possible we break through that for a moment, right? And as I look at gap fill, I'm just looking at other things that we might wanna gravitate to, right? So really, gap fills, I like to look at it and maybe go look at options data. I want to figure out if that level is really important or if a level in the middle of it is important. Right now, we would say a level in the middle of it is probably the most important, but we can violate that, fill the gap, maybe even go retest the 5 and then see that thing curl back up. Now, this is where it gets interesting because you have a gap fill right here, and this is probably one of the most important levels, like SPX, right here, 59.37. I think this is one of the most important levels. And you can look into the put and call walls. Why? Well, it's weird, laws. The way that I read into it, it's almost like the US uses Japan, and they see the benefits while our people potentially don't see the benefits. Am I reading into that correctly? I just want to know. Because their rate being so low would technically be good for them for a while. Ooh, this is a good question too. Laws, if you know this, please let me know. Would you be able to give me a percentage? Like, say, out of 100%, how much of it is Japanese investors using yen to invest in, or taking loans of yen to invest in American or European companies, compared to European and American companies using or borrowing from Japan to create positions? So how much of it is Japanese investors versus how much of it is European or the West investors? Hedge funds, all that kind of stuff. February 1st, 2 weeks weaker seasonality in January, and with no rate cut, January is better to minimize risk now. You're seeing pretty low implied volatilities, so I don't want to read into it too much. I just want to see if my thinking is correct here, and I think we are thinking very logically here, and that's a big thing, right? We don't want to be thinking with our hearts. We don't want to be thinking with the FOMO. We don't want to be thinking. We want to trust, you know, if you've been trading for a while, you can trust your intuition and then look at the charts and see what adds up the most. And right now for me, my intuition is telling me a 2-hour pullback would be the most likely thing, but I'm aware of a trap to the upside in case we get some bad news with the BOJ. In case we get actually the way to put it is, we're probably going to get bad news with the BOJ. So in case we get a worse than expected reaction with selling from the BOJ news. I actually don't know, but I'll try to find out. I think mostly US investors go directly into US funds as it's cheaper, and Japanese investors do something similar. Investing in Japan is expensive. Well, the growth is what I would think is not as good in Japan. I don't think the growth potential in Japan is there. So if US companies or US, say, hedge funds are utilizing the borrowing rate from Japan to then put it back into, say, US equities, then that would grow those equities. So it would directly be in a Japanese investor's benefit to take their money, borrow yen, and then actually put it not into Japanese companies. Okay, laws, I like this. This is fun. I feel like I'm kind of like putting puzzle pieces together. Trump speaking now, so that's an event. All right, we'll pay attention. Let's see. I just want to make sure Jess and I are good here. No rate cut January is better to minimize risk now. It depends on later today, I think. For some reason in my mind, I feel this inclination of how tied we are to Japan. And I always knew this. And I told my wife for the past few months, I was like, because we have friends in Japan and I talk to them all the time. And I'm like, we look at a lot of Japanese things. We actually learned a little bit of Japanese for fun, right? I've probably already forgotten all of it, most of it. But what I wanted to pay attention to and what I was talking to her about is I was like, it seems the US uses Japan. And I thought it was more for money laundering by forcing them to keep their rates lower. And that's why we don't charge them tariffs on anything. We haven't charged them anything since World War II. We just haven't. Zero. So what I was wondering was like, what I was trying to wonder was how we utilize Japan, and I thought it was maybe like money laundering or something like that, but really it seems to be we're taking a bunch of money from Japan and just forcing them to keep their rates low. Now they're having to raise their rates. So that can actually say that we're way more tied to Japan than I thought, really. And so I don't know how big it is, and that's why I was kind of asking Laws, like, how much money is actually at risk here, you know? And yeah, at the end of the day, you just go, okay, so we're tied to Japan. If they raise rates, that's bad for us. Yeah, Willow. And then we just go, okay, So now we have a Fed rate decision technically in like a week. Okay, cool. So if Japan raises, and then everyone's saying, hey, our Fed might have to raise as well. If both of our rates go up at the same time, that is a recipe for, I think, disaster. All right, Laws, I'm down. But tell me, Laws, real quick, before you type all that out, is that the worst recipe? Isn't the worst recipe we raise rates while the BOJ just raised rates? I feel like that's the worst recipe. I feel like we're kind of forced to cut 1.1 trillion in US debt, and they can leverage that debt to lend 9 to 1 for owning it. So the answer is closer to 10 trillion. 10 trillion. Holy shit. Oh my god, that's bigger than our annual budget. And our annual budget's nothing to... Our annual budget would make you crap your pants, right? It's like $7 trillion or something. Yes and no, because you raise interest rates means it costs you service on the debt. But if that goes... Trump, do the dance, buy shimmy. But if it goes to Japan, then it actually helps. But if that goes to Japan, it actually helps. No, because you raising interest rates means it costs you to service the debt. Okay. I just try to think of like, if there's that much money at risk and then you increase it to 0.5, the payments for the loan kind of go up dramatically really, really fast. And I think that's where you start to go, if they see weakness in their investment or if they're already underwater, they would have to get money from somewhere to pay those payments. Oh, it is, Laws. We'll have to do that sometime. I'm down. I just want to get into it. I want to get into the nitty gritty. I want to be like, I don't know why. This is something that has just piqued my interest a lot. Market moving fast now. Okay, one thing is, I'm going to go see if Trump's saying anything that we need to pay attention to. I want to see if anything's seriously being affected, like Bitcoin. Bitcoin, look at that. Did he say something about Bitcoin? Damn it, I should have put this talk up or something. Trump. Let's see if I have a live feed here or something. Try to find a live feed so I can just listen in. Thank you guys for sticking with me for a second here. And thank you guys for allowing me to ask questions. I know that we want to be looking at charts the whole time, but I think being informed about this is actually something important. I don't want to be informed about everything, but I think that this coming up is actually pretty damn important. So let's see here. Okay. All right, I'm listening in. You guys want to listen in?
Economy because of the election result. And just 2 days ago, Oracle, SoftBank, and OpenAI announced a $500 billion investment in AI infrastructure. Other companies likewise have announced billions and billions and billions, adding up to trillions of investment in America, in the United States.
Someone hedged.
And it's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent, for what's taking place.
Maybe
millions of lives are being lost. With oil prices going down, I'll demand
that
interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us. All over the progress that you're seeing is happening because of our historic victory in a recent presidential election, one that has become quite well known throughout the world. I think a lot of things are happening to a lot of countries.
He just said that we need to put the yield down, so IWM running would make sense.
Even countries that we aren't particularly friendly with,
I'd watch out
because they understand what there is a future and how great the future
I'm not
will be under our
convinced.
leadership.
My bullshit meter's
America
going
is
on.
back and open for business. And this week, I'm also taking swift action to stop the invasion at our southern border. They allowed people to come in at levels that
we already knew
nobody's ever
oil
seen
was going to
before.
come
It was
off.
ridiculous. I decided
and
declared
now
he's
getting rid of the
and very, very important.
The divergence is still holding here.
Emergency on our border immediately halted all entry of illegal border crossers, of which there were many, and began promptly returning the illegal trespassers back to the place from which they came. That action, as you've probably seen, has already started very.
Okay, hold on real quick. Actually, let me.
Military and National Guard troops to the border in repelling.
Just real quick. Yeah, so Laws brought up something that I just wanted to mention. You guys, you got to be researching into stuff because you'll see it all over Twitter all the time. I don't think their language with the executive order accidentally making everyone illegally a woman. You're going to see a lot of that on Twitter from dumb people and things like this. I understand that when you read it right away, you think that, but technically, right at conception, you technically do see with chromosomes and things, you do have that woman, you have X or Y chromosome, right? So you have XX or XY. So it is something, and I'm not a biologist, but I'm never going to read something on Twitter and be like, oh yeah. Now, I think the language they chose was bad. The cell language was kind of bad. Hold on, let's listen to what else he's got to say.
Enforcement against the American people and frankly against politicians, and restored the fair, equal, and impartial rule of law. My administration has taken action to abolish all discriminatory diversity, equity, and inclusion nonsense. And these are policies that were absolute nonsense throughout the government and the private sector. With the recent yet somewhat unexpected great Supreme Court decision just made, America will once again become a merit-based country. You have to hear that word, merit-based.
This is good.
Country.
This is good. Waiting on the MACD, but yeah.
An official policy of the United States that there are only two genders, male and female, and we will have no men participating
300%.
in women's
Nice job,
sports,
Chris.
and transgender operations, which became the rage, will occur very rarely. Finally, as we restore common sense in America, we're moving quickly to bring back strength and peace and stability abroad. I'm also going to ask all NATO nations to increase defense spending to 5% of GDP,
I think the Dow's holding on
which
by
is what it should
here.
have been years ago. It was only at 2%, and most nations didn't pay until I came along. I insisted that they pay, and they did, because the United States was really paying the difference at that time, and that's
a good man,
to
Chris.
the United States. But many, many things have been unfair for many years to the United States. Before even taking office, my team negotiated a ceasefire agreement in the Middle East, which wouldn't have happened without us, as I think most of the people in the room know. Earlier this week, the hostages began to return to their families. They are returning, and it's a beautiful sight, and they'll be coming in more and more. They started coming back on Sunday.
I'd be watching this too.
Our efforts to secure a peace settlement between Russia and Ukraine are now hopefully underway. It's so important to get that done. That is an absolute killing field. Millions of soldiers are being killed. Nobody's seen anything like it since World War II. They're laying dead all over the flat fields. It's a flat field farmland, and there's millions of Russians and millions of Ukrainians. Nobody's seen anything like it since World War II. It's time
That's
to
the trouble area right now.
Here in America, we have big
That's the
events
highest
coming
reaction
up.
I see as of now.
Next year, we have the 250th anniversary of America's founding. I'm so honored to be president during that. That's been a big event. They've been talking about it for 10 years. We also have the World Cup, and I understand Gianni's in the room. Infantino, he was very instrumental.
Dollar still holding at higher prices here.
He's there with you.
Still holding at zero.
I think and I want to thank him
SPY
for
going
that.
up.
And then we have the Olympics coming up, which I was instrumental in getting.
Worried about the Dow.
Also in my first
Look at
term,
the Dow.
and who would have known that by
Really
skipping a
worried
term
right now.
I would get the Olympics? I was upset. I said, you know, I got the Olympics to come, and I won't be president. But
The Dow's about to make that high. Look at this. Remember when we talked about the Dow?
You might call
Give me 1 second. As he's talking about Olympics, I don't care.
And the Olympics.
The Olympics, I don't care. Fuck Newsom. Sorry, my bad. This here is what I want to talk about. You guys remember what we were talking about. Very high chance to be a lower high here on the daily. So this is something I would be aware of. I don't think you have the signals to say that this is a lower high, but just in case, pay attention if this daily starts to cross down. You are starting to reach up to areas where this is getting pretty freaking frothy here. And we're actually making the equal level for that right shoulder that could have been back over here. Right, so we were paying attention to these levels. Way down here, we were talking about this up here. And look, now we're up there. So let's look, because these are starting to show those divergences. Most likely the SPY will follow this. It'll be important to watch what the Dow actually does if the SPY goes and makes that new all-time high. All right, really want to pay attention to that. And they're clapping, so he's about to go into the next topic, I think, in question.
Mr. President, for that very powerful speech. And I think
you could hear
levels
for the Dow
all the way from Davos to the White House. But next year it will be
the Dow is officially above the monthly and the weekly expected move.
So
this
we
means be cautious in these areas. You could see something crazy, but the risk is high.
Thank you very much.
So we also
the
know,
reward
Mr.
is not
President,
there.
That
The reward would be
you open
unknown.
up for interaction here. We have a great panel with some of the most distinguished business people in the world. Let me start with someone that you know really well, that I think is almost a neighbor of you in in Florida. Mr. Steve Schwartzman, Chairman, CEO, and co-founder of Blackstone Group. So, Steve, floor is yours.
Well, Mr. President, I'm sure the Crown Prince of Saudi Arabia will be really glad you gave this speech today.
What? Okay, old dude.
You've had the busiest
He just
4
stopped.
days that anybody can imagine, and congratulations for
Volatility is still holding.
My question is about
This
some
might be
of
a
the
30-minute
things
double
I've
bottom,
observed
so I'll
here
watch
at
this for the next
Davos.
few minutes here.
It's a terrific forum. I've met lots of people, as usual. I think I've been here 30 years. And
Yeah, you sound like
a
you've
lot
been
of
here
the
100 years. Go to
European
sleep.
Business people have expressed enormous frustration with the regulatory regime in the EU.
Can you guys hear
and
okay? Just want to make sure.
They attribute slower growth rates here because of the numerous factors, but especially because of regulations. And you've taken a completely different approach in this area. And if you could explain the theory of what you're doing, how you're going to do it, and what you expect the outcome to be, I'd appreciate it.
Well, thank you very much, and congratulations, Steve. You're a friend of mine, but on a great career. You have had an amazing career, and it continues. Just want to congratulate you. Very inspirational to a lot of people. I want to talk about the EU, because you mentioned specifically that I've also had a lot of friends and leaders of countries. I've gotten to know them all my first term and a little bit during this period of 4 years.
Yeah, that's a
and know them well, like them a lot, but they're very frustrated because of the time everything seems to take to get approved, environmental impact statements for things that you shouldn't even have to do that, and many, many other ways that it takes. And I'm going to give you a
joining,
quick little
Kevin. Appreciate you being here.
In the private life, my beautiful private life, before I had all these things happening, the world is a little different. I had a nice, simple life. You knew that. But when I had that simple life, I did projects. And I had a big project in Ireland. And it had to get approval on something that would have made it even better. And I got the approval from Ireland in a period of a week.
I wouldn't be trading stocks at that point, Laws.
Very efficient, good approval. And they informed me, though, the problem is you're going to have to get it from the EU, and we think that'll take 5 to 6 years. And they said, you have to be kidding. And this was before politics. And I said, wait a minute, it's not that important. I don't want to go 5 or 6 years, but it would have been a big investment. It would have been nice, and it would have been good for the project. And I sent the people to the EU to see if they could speed it up. And basically, it was a 5 or 6 year wait just to get a simple approval that Ireland gave me in a period of literally not much more than a week. And I realized right then, that was the first time I really was involved with the EU.
Wrong,
but
Suri.
I realized right
he
then that's a problem.
Food with diamond
and I didn't
teeth.
even bother applying to do it. And
that's good, Chris. That's good.
Quickly. I have to be very accurate.
It's got to feel some relief.
I don't want to be criticized. He did apply, actually. No, I want to be very accurate. So
Electric Waves, thank you for subscribing. I appreciate you being here, buddy.
It was just something you couldn't wait.
If you haven't
5
subbed
years
yet,
or 6 years to get it.
Give it a try, okay?
A lot of
give this channel a try for a week, all right?
In a big business sense, a lot of people are claiming that's the problem. From the standpoint of America, the EU treats us very, very unfairly, very badly. They have a large tax that we know about, and a VAT tax, and it's a very substantial one. They don't take essentially don't take our farm products, and they don't take our cars, yet they send cars to us by the millions. They put tariffs on.
I am going to look at things on
like,
my other charts.
I think they actually.
You guys can keep listening in. I'm just going to keep us aware.
Non-economic or non-monetary tariffs, and those are very bad, and they make it very difficult to bring products into Europe, and yet they expect to be selling, and they do sell their products in the United States. So we have, hundreds of billions of dollars of deficits with the EU. And nobody's happy with it, and we're going to do something about it, but nobody's happy with it.
XLU, utilities.
I think the EU has to speed up their process. Friends of mine that are in some of the nations within the EU, great people, they want to be able to compete better, and you can't compete when you can't go through the approval process fast. There's no reason why it can't go faster. So, I'm trying to be constructive because I love Europe. I love the countries of Europe, but the process is a very cumbersome one, and they do treat the United States of America very, very unfairly with the VAT taxes and all of the other taxes they impose. One other, just to finish up, I got a call from the head of a major airline, one of the biggest airlines in the world. And
which airline?
He said,
Tell us.
Could you help us? What? Landing in Europe is brutal. They charge us fees for everything, and it's so unfair. I said, how does it compare to China? He said, it's much worse. And the other thing, as you know, they took court cases with Apple, and they supposedly won a case that most people didn't think was much of a case. They won 15 or 16 billion from Apple. They won billions from Google. I think they're after Facebook for billions and billions. These are American companies, whether you like them or not. They're American companies, and they shouldn't be doing that. And that's, as far as I'm concerned, it's a form of taxation. So we have some very big complaints with the EU. Thank you.
Thank you very much, Mr. President. We'll now go to one of your friends in the EU, Patrick Pouyanné. He's the chairman CEO of Total Energies. I guess you have a question ready, Patrick, for the president.
Mr. President, as we understand, energy is at the top of your agenda, and it's an honor for me to represent the energy industry tonight. In this panel, Total Energies is the fourth largest oil and gas and electricity company in the world. I will not ask you a question about the oil price. It's quite clear what you expect from us. I will go to gas more. And our company is the largest _1 exporter LNG from the U.S.
Sofi, got to be cautious. Outside of the weekly expected move, Palantir cautious outside of the weekly expected move, flat divergences.
LNG projects in Texas, $20 billion. It's far from 200, but it's $20 billion. And we contribute with that to security of supply to Europe, as we export this LNG to Europe. Some experts fear that if there are too many projects
this is something to point out
in the US on LNG, this could have an inflationary impact on the US domestic gas price. And they recommend a pause on these projects. I would ask you the following question. What are your views about such a pause on investments on LNG in the US? What would happen if you would observe an increased domestic gas price because of these exports? And final question,
trying to get oil to go down, but
for Europe, would you agree to guarantee security
holding the divergence point as of right now?
LNG to Europe?
Well, on the last part of your question, yes, I would. I would make sure that you get it. If we make a deal, we make a deal. You'll get it. Because a lot of people do have that problem. They make a deal and then it can't get supplied because of war-type problems and other problems. So we would absolutely do that. LNG is very interesting because when I took office for the first term, one of the first things I looked at was there were two very massive plants in Louisiana, a state that has been very good to me, won it by many, many points. And I felt strongly indebted to it,
silver is
actually.
going
And
to maybe catch a bid later.
That have been under environmental consideration for more than 10 years. And they were costing, as you say, you know how expensive those plants are, but they were costing like 12 billion and I think 14 or 15 billion, but they couldn't get their permits. They were in review for years.
Sorry, I'm clicking around a bunch. I need to do this on my other charts.
A decade or more. And I said, so ridiculous. I know so much about that because in the construction industry, I had to go through it too, but I got good at it after a while. But I saw the projects, and you're talking about a total investment of 25 to $30 billion, and it looked like it was going to end. They couldn't get their permits, and I got them done in less than a week. It was done, completed. In fact, when they called them to announce that it was done, the countries, largely countries, Japan was involved and another country and some very big investors, they couldn't believe it. They actually couldn't believe it. And I said, just do yourself one favor. Don't pay any consultants because the only one that got it done was me. I got it done because it was the right thing to do for the U.S. and for the world. But the consultants
natural gas
had nothing
rejecting
to do with
the 2-hour
it.
cross-up as of right now could be a right shoulder.
Millions of dollars because Trump did it. Nobody called me about it. I just heard it was a problem for years. And I got it done because it was the right thing to do for the U.S. and the right thing to do for beyond. It had to do with energy. Very important. So I think it's very important. I think I disagree with one. I think the more that you do, the lower the price is going to go. And what I'd like to see is rapid approvals. We're going to give very rapid approvals in the United States, like with the AI plants, talking to many people want to build them. That's going to be a very big thing. We're going to build electric generating facilities. They are going to build. I'm going to get them the approval. Under emergency declaration, I can get the approvals done myself without having to go through years of waiting. And the big problem is we need double the energy we currently have in the United States. Can you imagine? For AI to really be as big as we want to have.
This is what we were talking about this morning.
Competitive. It'll be very competitive with China and others. So I'm going to give emergency declarations so that they can start building them almost immediately. And I think it was largely my idea because nobody thought this was possible. It wasn't that they were not smart because they're the smartest. But I told them that what I want you to do is build your electric generating plant right next to your plant as a separate building connected. And they said, wow, you're kidding. And I said, no, I'm not kidding. You don't have to hook into the grid, which is old and
it's kind of fax laws. At least the dramatic, or at least a pullback in some fashion.
Way to get any electricity.
If you're in pullback mode and the Japanese trade happens,
allow them to go on a very rapid basis to build their plant, build the electric generating plant. They can fuel it with anything they want, and they may have coal as a backup.
Seeing the dollar drop off.
Clean coal, you know. If there were a problem with a pipe coming in, as an example, you're going with gas, oil or gas, and a pipe gets blown up or for some reason doesn't work, there are some companies in the U.S.
pretty good base for
have coal
this 30-minute
sitting right by the plant so that if there's an emergency, they can go to that short-term basis and use our very clean coal. So that's something else that a lot of people didn't even know about, but nothing can destroy coal, not the weather, not a bomb, nothing. It might make it a little smaller, might make it a little different shape. But coal is very strong as a backup. It's a great backup to have that facility, and it wouldn't cost much more.
I'm going to keep my headphones on. I'm going to use the restroom
than
so
anybody. We also have more oil and gas than anybody.
I'll be right back.
So we're going to make it so that the plants will have their own electric generating facilities attached right to their plant. They don't have to worry about a utility. They don't have to worry about anything, and we're going to get very rapid approvals.
Thank you. Thank you so much, Mr. President. We'll now go to another CEO that you know very well, Brian Moynihan, the CEO and Chair of Bank of America.
Good afternoon, Mr. President, and congratulations, and obviously an eventful week for you and your family. If you remember 5 years ago, you came here and we walked among 150 CEOs from all over the world, and you engaged with them about your policies and your procedures. This year you're not here, and yet this week was eventful from the orders that you mentioned earlier, literally a wave of orders coming out on immigration, on trade, and many other matters. And so as a representative of the United States here, we got a lot of questions about what does all this mean and how would the president square this with his clear focus on growth, prosperity, market growth, stock market growth, a good bond market, and bringing down prices. So how do you think about the impact of all these orders and how fast they come out, and how you're going to balance them with that scorecard of being successful in both continuing GDP growth, bringing down inflation, and also having a good stock price appreciation for the American citizen?
Well, I think it's going to actually bring down inflation. It's going to bring up jobs. We're going to have a lot of jobs. We're going to have a lot of companies moving in. You know, Brian, we're at 21%. It was at 40%, and I got it down to 21%, the corporate tax. And it was actually, if you look at state and city, it was in many cases much higher than 40%. I got it down to 21%. And now we're going to bring it down from 21 to 15% if, there's a big if you make your product in the U.S. So we're going to have the lowest, just about the lowest rate. It'll be, the 21 is on the low side worldwide. The 15 is about as low as it gets. And by far the lowest of a large country, a large, you know, rich, powerful country by far, not even a contest. So we're going to bring it down to 15% if you make your product in the USA. So that's going to create a tremendous buzz. We're also probably going back to the one-year deduction where we deduct, you know, we did that originally, and that was amazing what the impact that had, the one-year deduction, which built up over a period of time.
Sorry about
that.
It
expires. But we're going to go back to that when we do the renewal of the Trump tax plan. We have to get Democrats to approve it. But, you know, if the Democrats didn't approve it, I don't know how they can survive with about a 45% tax increase, because that's what it would be.
This is U.S. oil?
So I think they're going to do. We've been working along with them pretty well. I think it's very hard for a political group to say, let's charge people 45% more. So I think we're in good shape. But we're actually doing a reduction for business and small businesses where you're going to bring it down to 15%, which is really something. And by the way, speaking of you, and you've done a fantastic job, but I hope you start opening your bank to conservatives, because many conservatives complain that the banks are not allowing them to do business within the bank, and that included a place called Bank of America. This conservative, they don't take conservative business. And I don't know if the regulators mandated that because of Biden or what, but you and Jamie and everybody, I hope you're going to open your banks to conservatives, because what you're doing is wrong.
Oh, wow. That was...
Mr. President, I'll say that your friend Gianni said hello, told me to tell you hello, and we look forward to sponsoring the World Cup when it comes, both this summer for the club and next year. So thank you for getting that for the United States.
Thank you very much, Brian.
Thank you, Mr. President. We'll now go to Anna Butin. She's the executive chairman of Banco Santander, one of the big European banks, and also in the U.S. So, Anna.
Mr. President, congratulations on a historic victory. I believe you don't know me as well as my fellow panelists, so a few words. Santander is one of the largest banks in the world by number of customers, 170 million.
Because this could be a lower high.
Brian or my friend Jamie have.
This can be a lower high.
They fixed the regulation.
That's coming. That's coming.
That was cheeky.
we're a big investor in the United States. We have many million customers, 12,000 employees. We're one of the largest auto lenders. And we recently launched a fully digital bank called Open Bank. We strongly believe banks have a pivotal role in the economy.
Still 2-hour pullback, most likely for financials. Unless the daily crosses, that's where it goes wrong.
So,
lower high was the most probable thing for the financials.
And reducing bureaucracy. So my question is, what are your priorities in this regard, and how fast is this going to happen?
So you need this too.
Thank you very much.
I think it's going to, thank you and congratulations. I know very much about your bank, and you've done a fantastic job. Congratulations. We are going to move very quickly. We've moved very quickly. We've done things in the last 3 days that nobody thought were possible to do in years. And it's all taking effect. It's going to have a huge impact on the economy, a huge positive impact. Money was being wasted on crazy things. I mean, the Green New Deal was such a total disgrace, how that was perpetrated. And it was conceived of by people that were average students, less than average students, I might add, and never even took a course in energy or the environment. It was just a game. Remember, the world was going to end in 12 years? Remember that? Well, the 12 years has come and gone. It was going to end. It was going to all foam into earth.
This is just the dangerous area, Izzy. And Jess, we might look at that in a moment.
They really...
We'll talk about that maybe in a moment.
They really scared the Democrats.
Anything above this is dangerous, but this is the most dangerous area.
Maybe could have fought harder to stop it, but it's been a tremendous waste of money. You know, during
that's where you would set up what's drawn at the bottom here.
We had the cleanest air, we had the cleanest water, and yet we had the most productive economy in the history of our country. We had the most productive economy.
No, Jamie.
Until COVID came, we had the most productive in the history of our country by far. And actually, you could look worldwide. We were beating everybody from China to everybody else. So. And we think we really now,
oil be cautious with. I know it's down right now,
all of the,
but I want you to realize, like, you could be making that point of divergence. I don't think this is a great, easy short. If you're looking at the daily chart, yeah, you might be like, hey, this is pretty juicy. We could fall, but the 200 is there.
Respect from other nations. Canada, we have a tremendous deficit with Canada. We're not going to have that anymore.
This is not an easy short.
I don't know if it's good for them. As you
probably it might be for a day trader if they know what they're doing.
And if you're a state, we won't have a deficit.
You're testing breakout area with 2-hour divergence potentially forming. I don't think this is the easiest short
over the years, and it's not fair that we should have a $200 billion or $250 billion deficit. We don't need them to make our cars, and they make a lot of them. We don't need their lumber because we have our own forests, et cetera, et cetera. We don't need their oil and gas. We have more than anybody. So, you know, just as an example, with Mexico, we're dealing with Mexico, I think, very well. And we're just, you know, we just want to be treated fairly with other nations because
if that crosses,
there's
maybe
hardly
over time.
A nation in the world, and I blame this on us.
If that crosses up, though, it's not going to $35. This is what I'd just be aware of.
For some reason, I'm probably mostly it's stupidity,
and
but
you
could also say other reasons, but mostly stupidity. They've allowed other nations to take advantage of the U.S., and we can't allow that to happen anymore. You know, we have debt. It's a very small debt when you compare it to the value of the assets that we have, but we don't want to do that. We want to just have
it's a small debt if you compare it to the value.
And we'll be able to do that fairly rapidly. And a lot of good things are going to happen.
Incorrect, but
honestly,
if the value of the assets drop dramatically,
for the world, and good things are going to happen for the people that are dealing with us, allies and beyond allies. One thing very important, I really would like to be able to meet with President Putin soon and get that war ended. And that's not from the standpoint of economy or anything else. It's from the standpoint of millions of lives are being wasted. Beautiful young people are being shot in the battlefield. You know, the bullet.
I do like this about Trump. He does focus on life a lot of the time. That is something that I like from a politician.
The only thing going to stop the bullet is a human body.
Stopping the bullets. I like that.
I've seen pictures of what's taken place. It's a carnage, and we really have to stop that war. That war is horrible. And I'm not talking economy. I'm not talking economics. I'm not talking about natural resources.
What I like.
I'm just talking about There's so many young people being killed in this war.
This.
And that's not including the people that have been killed as the cities are being, knocked down building by building.
I'm not someone who will say
we really should get that stopped.
Like someone. I do not know Donald Trump at all.
And I think
do I like the things he would like to accomplish more than, say, his opponent was this year, Kamala Harris, and say Joe Biden back in the day? Yes.
Relationship in the world is between
I will still be very critical of Donald Trump.
28% of the
just like I'd be critical of Joe Biden, just like I'd be critical of Kamala Harris.
GDP. And we know that you called President Xi Jinping last Friday. We heard that you had a good discussion. How do you see the relationship between the U.S. and China in the next 4 years under your leadership?
He called me.
Elon, I think, is a weirdo,
good.
But I think he's intelligent.
We're going to have a very good relationship. All we want is fairness.
I wouldn't say I like him.
Playing field.
Again,
we don't want to take advantage.
I like some of his standpoints on things,
deficits with China.
Some things I don't.
Biden allowed it to get out of hand. He's $1.1 trillion deficit. It's ridiculous, and it's just an unfair relationship. And we have to make it just fair.
I do not like that Trump is most likely to try to keep stocks higher. He just talked about the valuation of assets in comparison to the debt. That is not a good thing in my mind.
With other countries, a lot of Asian countries actually, but we have deficits that are very big, and we can't.
That is I want stocks to remain higher, so I will pump money. So I don't like that.
President Xi very much. I've always liked him. We always had a very good relationship. It was very strained with COVID coming out of Wuhan. Obviously, that strained it. I'm sure it strained it with a lot of people, but that strained our relationship. But we always had a great relationship, I would say, and we look forward to doing very well with China and getting along with China. Hopefully, China can help us stop the war with, in particular, Russia, Ukraine. They have a great deal of power over that situation.
Exactly. And, he's just like, in that case, he's like every politician, Chris, and that's what I don't like.
Conversation with President Xi. And hopefully we could work together and get that stopped. We'd like to see denuclearization.
In that regard, he's talking like a politician. I don't like that. An election result, for the most part, I like what he is doing.
We were talking about denuclearization of our two countries, and China would have come along. China has a much smaller right now nuclear armament than us, or field than us, but they're going to be catching it at some point over the next 4 or 5 years. And I will tell you that President Putin really liked the idea of cutting way back on nuclear. And I think the rest of the world, we would have gotten them to follow. And China would have come along, too. China also liked it. Tremendous amounts of money are being spent on nuclear. And the destructive capability is something that we don't even want to talk about today because you don't want to hear it. It's too depressing. So
see, I think this about Donald Trump right now, as far as markets go, and as far as everything goes, he needs to be positive. He needs to show a positivity. He's the leader. So he wants to express positivity about a lot of things. We are going to work on these bad things and we are going to get better. Like, I understand it. But just know with that positivity could come a decision to bail out things if something bad would happen, which is what that statement overall means.
Well, you're going to have to ask Russia. Ukraine is ready to make a deal. Just so you understand, this is a war that should have never started. If I were president, it would never have started. This is a war that should have never, ever been started. And it wasn't started during there was never even talk about it.
That's true, Chris, and that's
that it was the apple of President Putin's eye, but I also knew that there was no way he was going in, and he wasn't going to go in. And then when let's pause on this
for a bit. The thing is, if he would supplement our economy with, say, jobs that pay fair wages and do that deregulation or lower the taxes for companies that invest in U.S., you could see, instead of deflation, you could see the inflation even out, stocks remain okay, and this is a very hard thing to pull off, and wages increase. The only way that you can get rid of inflation in a way is to increase wages in some form. But it's just pulling that off is near impossible in my mind with how things are right now. So this is why I'm critical of people who want the evaluations of stocks to remain higher in relation to the debt. because there's really only one way to get rid of debt, and that's to get rid of all of the crap that's out there, or to potentially create a stronger economy, like an actual strong economy, not a supplemented strong economy. I'm more talking about wages, Willow, in the form of buying power. Buying power. I assume right now companies have supply issues. We see that in the 3 big purchases. We see supply issues. We see the lowest amount of people wanting to buy homes. We see the lowest amount of people trying to open up and buy new cars. And I haven't looked into furniture, but we'll look into that maybe sometime. But yeah, that's what I'm talking about there. It's more the buying power increase versus the wage increase. It will come in the form of wages, but that's the only other way I can see it. And and this is what you're expressing is why it's near impossible to pull off. Because if people continue to spend at the same rate and show that demand, then yes, it will increase the prices of goods over time if the supply starts to get smaller and smaller too. So if the supply remains the same and you increase wages and that gives people more demand and the supply remains the same, yes, you will see an increase in price. That's why I'm like, it has to come with American-made products, because you need production to keep up with the demand. You need the supply to keep up with the demand in order for the prices to remain at a level rate there. But do you see how we're talking about so many things with that? And do you see how hard that would be to pull off? And that, in a way, is what Trump is saying by trying to create an incentive to produce here in the United States. So it's near impossible to pull off. And the damage that's been done over the last 4 years is just, actually, I mean, technically, like, let's not just blame Biden on this. Let's blame all of them. Okay, we should be blaming all of them. Technically, the damage that has taken place since the 2000 bubble that came all the way back, since 2008 bailouts came all the way back, it's just, it's near impossible to pull off. It's very, very difficult. But let's talk about some market things. I think thanks for tuning in. Stream ended 23 seconds ago. So as far as it looks right now, I'm gonna just double check. But it seems the stream has ended, at least on this platform. Yeah, it seems that ended just now. I just want to see, but I'm pretty sure it shows it's ended on my end. The stream stopped. So look at Bitcoin right now. Yeah, Bitcoin's supposedly going to see some bullishness, but starting to fade here. Nothing was really mentioned of Bitcoin. We didn't hear Bitcoin's name, did we, too much? Okay, Bert, thanks for letting me know. I didn't know if the feed just cut out or not, because it seemed like he was like mid-answer almost, but just slapped us with stimulus and send the problems to the next gen like boomers did to us. Well, that's the whole point, is now the taxes. So if you go pull up that you know, the thing that's always tracking the national debt, you will see a period of time during tax season where the debt actually comes down. The rate that we're at right now, though, and with interest rates where they are right now, why those need to drop is because you're about to not be able to pay those interest rate payments. You're about to not see the debt be able to come down at all, even when taxes are included in there, when you have tax season. If you go look at that debt during tax season, you will see it coming down for a little period of time. And then it goes right back up. Then it just starts going right back up. So that's the big problem there, is now we're at a point where we won't be able to pay those interest payments. That's why he wants yields to go down. That's most likely why he wants the yields to go down, and that's the big risk of yields actually having to go up. Because by yields going down, you could stimulate inflation. That's why I think he's talking about production here, trying to do it potentially with wages instead. Instead of having price come down, have your wages catch up to the price. But that's where Willow is pointing out something very good there, which is production. You have to have supply keep up with the demand that could come with people randomly making more money, because people are known to just spend and spend and spend. So, yeah, I think a lot of it too is our behavior. I think a lot of it is we're addicted to spending. I think we're addicted to spending, and I think that's a big problem. I've completely switched that lately. So if he can pull it off, that would be a miracle in my mind. I don't think he can pull that off. I think it's great that he's a little bit optimistic, but to pull that up is just I just can't. I can't sit there and go, yeah, that's highly probable. In fact, it's nearly improbable. It's like the total opposite. So we'll see. We'll see. He did talk about the price of oil needs to come down, right? As oil is actually showing potential here. It had, you know, the attempt, if you exclude the wick, for the higher low, but coming down again. So that crosses down. We're going to test the exact breakout area. So I would just be a little bit cautious with oil. I don't think this is a great short opportunity, but I don't think it's a great time to be like, oh yes, this is going to reverse to the upside. It kind of seems like it needs to figure out its ground here. BOJ tanks market tonight? Yeah, I'm down. I mean 2028. Hold on, what'd you say before, Dave? Dave, what'd you say before? Because the timeline I'm looking at says 2029. Says 2028 to 2029 is a very worrisome time if he actually saves the market in some way. So we'd go through a corrective period, a confusing time here, then we actually would see a golden era, and then that would lead into an actual, like, the ultimate bubble in 2028 to 2029 if we don't go through that pain now. It's all trash. You'll continue spending. If it lasts, spend more now, but less in the long run. Break the trash product. Well, yeah, and you're seeing that with homes. I dare you right now to go look up on YouTube and find people that are looking into new construction homes and talking about the construction being garbage. Those 500,000 new construction homes, those $2 million new construction homes are built with paper and shitty workmanship. It would be a 12-year lost decade. Yeah, I think if we do the thing going into 2009, then yeah, you're kicking the can the last time that you can. And I'm genuine about that, and that's why I will be critical of Trump. I voted for Trump. I will be very critical of Trump. I vote based on what I see as policies that I think I can get behind. I see as things that are best for my family, and that's it. I'm not going to get in some rant about whatever and whatever else. I just vote what I think is best for my family. And if everyone did that, instead of paying attention to Twitter all the time and just looking at policies and then making a decision based on what they would like for their family, I think we'd be better off. But that's it with politics. What I want to pay attention to is, hey, now he's in. So do I just forget about everything? No, I find out what he can do that can affect me and my family, and I can agree or disagree with it. Yeah, you're in a sweet spot as far as the housing market goes, where you almost want to buy a house that was built in potentially in the early 2000s or even the 1990s. Because once you start to go past the 1990s, especially, you start to get into, okay, you're going to run into home improvement. So you're in a time where new construction can have a lot of problems. It's not going to hold up. The truth is, a lot of people estimate that the homes that right now, if you're taking a new construction home, you're pretty much, your home could break down before you're done paying your 30-year mortgage. And that's crazy to me. That's just that's crazy to me. Swiss 20, same structure at the top. Hey, let's go, Ben. Ben, let us know. Let us know how it goes. I can check on it on my other things, though. I'm not going to do anything with the yen because I think it's still a 50-50 flip. Like, in my mind it is. I know they're most likely to raise, and that means that the yen should go up. Isn't that what regulation and codes are for? Yes. But guess what? The regulation and codes, they're not meeting them, and they don't care because they are just told they need to pump out houses. They're going supply, 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 while the demand is actually dropping like crazy. They're trying to supplement, say, 2 years ago demand now. But now people don't have that demand, and now they have all the supply. That's what happens when you rush things. Just like what someone said in the chat. It's like, you know, people are buying things that break down really quickly when you should buy something nice that lasts longer. If we can switch back to that mentality, that's fine. But people just see a house, they look at it, they say, oh, that looks nice. They don't dig into it. The truth is, if you want to get a nice house right now and it is new construction, you need 4 experts to go in and do 4 different inspections. You need a bunch of inspections. Don't get me started on California with this fire, man. I am so sick of, you know, California just treating its citizens like absolute asshole. Man, don't get me started on that. My grandpa lived there, so. Like, yeah. It's just a rough time. And them saying like, oh yeah, they're not going to do the Hawaii thing there. They're going to do the Hawaii thing there, and you're going to see, you know, rich people go in and buy them and screw over people who lost their homes. At the end of the day, the main thing that pisses me off is humanitarian things. That's why I think I like when Trump says things about like, I don't care what the cost is. I don't care if it hurts the economy. Let's just stop people from dying. I actually like that. And yeah, that could hurt my money. But if I lose money and someone else lives, I'm pretty happy. And a bunch of people live, I'm pretty happy. And it's my fault for not seeing the signals. That's why I lost money. Well, just take it into consideration. A buddy of mine bought a home. And he bought a home. And the first thing I asked him, I was like, well, what'd you do? Did you like turn on the faucet? Did you check the faucets and all that stuff? He's like, oh, no, why would I check the faucets? I'm like, dude, you got to check the faucets. And then when he moved into the home, I went and turned on all the faucets and I was like, just check. Every single faucet was loose. It turned out the homeowner had done all of the installation of all the faucets himself when he did a rebuild, when he did a revamp of the kitchen and things like that. So what did he run into? Well, now his faucet just barely has water pressure. And like every single bathroom has bad water pressure. The dishwasher leaks because he reinstalled the dishwasher himself and all those things. He just didn't know what he was doing. I was like, those are little things that I pay attention to because those are the things I use every day. So little things like that. Now, what's behind the walls? Yeah, Tina, and that's sad. Tina, how are you doing? Can I check in on you for a sec? Can you just, you don't have to tell us much. I just want to make sure you're doing all right, Tina? Yeah, Jamie, and you kind of have it spot on. Doing good, thanks. I'm glad to hear that, Tina. Thank you so much for sharing with us, and I'm glad you're doing well. Thanks for showing up today. Agreed, you need HVAC, plumber, electrician, foundation specialist, a construction specialist, a good termite company who raises... Usually you can get away with the... if you have a construction specialist, a foundation specialist, usually you can get away with the good termite company, but you might see the foundation specialist tell you like, hey, there is some termite damage. Hey, the construction specialist might say, hey, this could potentially be termite damage. So, but yeah, you need a lot of inspections today on new construction homes. And I would say even any home that was built after like 2010, I would probably get every single inspection possible. Which is nice because my family, we're very versed. I have architects in my family. I have electricians in my family. We have a big extended family. So it's very, very nice. I can almost call them and get a first opinion. They're kind of all retired, so they don't do it too often, but they'll tell me if I need an expert opinion over theirs. He's demanding lower interest rates again. Yeah, he's sending a signal to Jerome Powell. It doesn't matter though. At the end of the day, who's been controlling the rates? The bond market. Who's been controlling the rates? The bond market. This is where they cut. Who's been controlling the rates? Because they're cutting here. The bond market. Which is kind of a recipe for bad things. We'll see. He sounds optimistic. That's good. I think you want your leader to be optimistic. But I think you want him to tell it to you straight. And I think he'll have a moment where he has to do that in 2025. Apple flushing again. Apple, I'm looking for this, though. I actually kind of like this. I don't mind. I want to see that from Apple. But I told you, Apple is good at telling you if something is sick. I told you, because this all happened, way back here happened, and the market, I believe it was here. Let's see here. What is this? January 24th, 2024. January 24th, 2024. And notice Apple was going down that entire time, and then the market went down. So Apple had one of those moments. It lasted for a long time. But I was paying attention to that back in the day. Was that 2024? Am I incorrect? Yeah, January 2024. That's where we went through some problems for a second. So Apple might be warning of something. And sorry for the big danger there. I got to get it to where it like looks nice again. I'm just going to leave this here and I'm going to start to look over here. Trump coin, not happy with that a little bit. That way we can flip back over to the SPY real quick. Possible double top on lower time frames. I would more lean towards this. I want you to see how this is a squeeze. So I'm always going to look for what's bullish. I would look at this. I know that's crazy. But if you go into a little 5-minute chart, it's probably looking like what? This is the level I need to break through. Here's my left. Here's my head. What if this makes a right shoulder and curls up into positive territory? I'd look at that. Now, it is important to understand that the 30-minute could reject here. You're above a weekly expected. Like, am I playing any bullishness above a weekly expected move? Hell no. Hell no. You're going to tell me that we do this, and then Friday I take calls, and we just have a 68% chance to land right there? Yeah, no, I'm not doing that. Yeah, just as it's bullish, and we are very likely to see that last little trap to the upside. People are already getting bullish off this, too, so 0.715 on the PCC. So I just want to pay attention to little things like this. Little things like this are kind of flaggy. I want to see that the 30-minute hasn't really told me the trap has been fully set yet. So we're watching. And is there really a trap right now? I mean, the dollar's going down. It's starting to drop a little bit, so we'll see. It's fun, though. Wow, dang it, I clicked around again. I meant to click over to the other chart when I click around. Frick. I just want to see if all this plays out. Because I think that's like one of the perfect traps. And the thing is, here's the other thing of why I'm not going to short this betting my, like I said, I'm only betting like an old kitchen table, a 250 bucks. I'm not doing a bunch. I'm not going to bet the house on this. I'm not going to bet the car on this. I'm not even going to bet my nice couch on this. I'm going to bet an old kitchen table or something. Because this has risk of exploding to the upside. We still have that potential to squeeze. So can I take a position? Yes, on volatility, I think you can. But at the same time, I need to understand if I'm using an excessive amount, that's not necessarily, in my opinion, the best decision at this point. And I'm just mainly talking about how I'm thinking about this for myself right now. And that's how I'm thinking about it. I've already made the decision, so my mind is clear. What was the quote I said I liked? Plan the trade, trade the plan. And massive cup in hand. I think you're right to point out little things like that. Apple's not dropping excessively, but it is retesting the 5, so another drop is likely. But Nvidia here as well. It's like if we want to bust through that high, this has held as resistance multiple times. This is going to be, I think that'll be hard to take out at this point. But if we can reload and then see that curl back up, I think that would be pretty good. But I think you wanted to get the handle here to go test this high. That's what I think. I think this is too excited and you could throw up. Right? Remember this about Nvidia too. Nvidia still was more likely to see the lower high, right? I think it is, because this is a pretty fast reaction, so we're just watching. What was it? It was the DIA, or the Dow. Now, these aren't the right levels, don't get too, bearish right away, but you are seeing those levels up here, just so you're aware. Right, maybe I can show that off, actually, because this is the DIA. Who the heck is, Streaming that. Okay, let me go look so I can get that level. I just don't update it on these charts. I update it on mine. You're above a monthly and a weekly. And you're above a monthly move now. And you're creating that right shoulder that could have been that we talked about down in these areas. Remember when we talked about this? Who was here when we talked about this? That could have been. Well, sometimes when you dramatically lose that, you make the right shoulder that could have been. And lower high is still, as I believe, the most likely scenario here. This gets scary. Now, as you look at the 2 hour, you're going, hey, it seems a little bit less likely, and we could do something like that. As you look at a 30-minute, you're going, okay, this RSI is actually showing me the divergence on the MACD and RSI at the same time now. This is when we pay attention. This is when pullbacks can happen. But you have to understand, we're in a short squeeze. That's very obvious. You're just riding the 9 on these last moves up, curling down, but still heading in the upward direction, violating. You are in a short squeeze. It's just this is where we might need to pull back from. Now, that could be brief. That could be bigger. That's why the risk of this just continuing is still there. But a brief pullback looks decently necessary. Let's look at the Qs. Q's still negative. Q's not able to do it. That's kind of bad. Who the heck just did something over here? Short Fridays, $5. Google attempted to break out 200 for the 3rd time on the daily. Thoughts? Let's go look at that real quick, because Google was interesting. Now, my problem with Google right now is the fact that we keep reacting, and we got this wick. This wick is that weekly expected move. Now, we are moving sideways overall, which is giving you that pullback on the MACD. That's great. But you're setting up that point of divergence across. And I think you do have a shot that this could actually just do this, and maybe we need to do that first, right? Little something like this in here. But if we do this and then we fail, I'm pretty convinced that that's some kind of trap at that point, right? But the state of the market right now could be a trap at that point. Now, is that a trap that's going to send this down to the absolute terribleness, right? I wouldn't necessarily say so right away. I would say the daily chart has been curling up, so it probably wants to see this extend for a little bit, but maybe it just needs to reload for a second and then turn up. Right? I don't think this is like the most terrible look. I think Google overall looks okay, but I like the fact that we're trying to hold this level. I think that's great. I like the fact that we didn't break below these levels, like in hold, right? No closing below that level. That's great. But I have to be aware that if this starts to shift down, it could mean ugly things. We have some crazy things going on, and you have a weekly expected move above you. I want to see what the monthly is. Yeah, I would more so be inclined to look at this like next week with some fresh weekly expected moves. See how it lands on Friday. 203 is still pretty damn likely to set that trap. Is Tesla making a head and shoulders in the 2 hour and 30-minute time frame? Let's go check. We haven't looked at Tesla too much. This looks like a head and shoulders to me. Looks like a head and shoulders to me. Now we'll see if that's able to play out. If the 2 hours turning down, that's able to go negative. Hey, remember what we were talking about? This still might need to go deeper, down to something like 357.78. We're aware of that, and you're at risk of doing that. You're starting to get close to negative territory. So if you don't want that to happen, you don't want this to go down, you need a 30-minute to start curling up, like soon. Do you start to lose this, then you have a difference here. Low, a high, a higher low, a higher high, a higher low, a higher high, a low, an even low, a lower high. You make that lower low, uh-oh. You might make a series of lower lows. Now we got to see if that thing ever reverses back up, but that's just the game you're in right now. So I think you want this 30 minutes to curl up now, or else you're at risk of making lower lows, and that's not a good thing for the trend. TLT really dropping off there as well. with the 30-minute divergence. Look at that. We always get something. People think, you know, yields are random. It's still the bond market just doing bond market things. It's still just buying and selling money. It's still just money. DOJ leaks, and Nikkei is reporting that while some policymakers remain cautious, the majority are likely to approve the hike. Might be smart to step away from markets till Monday. Yeah, that's facts. Was that really a leak? In the QQQ and SQQQs? Hey, good luck to you, bearish panic. Good luck to you. That's all I can say about that. If anyone's going to say YOLO in my chat, I'm just like, hey, good luck to you. I'm going to wish you luck. Oh yeah, let's turn these on this one too. So yeah, we know where the danger area is. I think you're right to call it out, Ben. I'm not going to disagree with you at all. I think you're right to call it out. Google, I'm worried if that 30-minute shifts back down too, by the way, short Fridays. I'm a little bit worried if that 30-minute shifts down, because that's just not in the direction you want to see. As far as the daily goes, you're getting a curl up with a positive bar, but I think like a move to fill a gap or something would still maybe need to take place. If that 30-minute curls back down, I'm not very happy with it, especially if we start to lose that 199 again. The gap fill towards that 197.50 or even all the way down to 194.39, reach down into the liquidity, and then maybe you can get higher after that. Market's going to be moving crazy. The crazy thing for me is implied volatility today, not the highest. Really not that high. Like if I go look at my my calculations over here, and I pull this up and I go look at implied volatility, I'm looking at 10% for the SPY for the day, 16% for the Qs. You know what it was yesterday? It was around 24% for the Qs. So implied volatility has dropped here. I'm wondering if we're going to see that increase in the next few hours, like by the end of the day. How are our buddies over at GME doing? Good level, positive trend accomplished. That's good. 2 hour curling up. I'm still worried about the 2 hour dropping, but you're taking back the 5. That's a big deal. AMC rejecting on the 2 hour. That could be good. I think this is pretty extended, so hourly, yeah, hourly might be your friend here. That would be a higher low, which means maybe test the high, go make a new one. You can go positive. That is highly probable. Very interesting from AMC. DJT. 30 minutes, some rejection divergence popping up as we retest these levels down in here. Let's see, you know, the 2 hours pretty beat up. I'd still be looking for a lower high from DJT. But very cool. Very cool, very fresh, very new. The main thing we're going to pay attention to, though, I think is the SPY. I think the SPY is going to be good at pointing this out, because if we go look at the Qs, it's so lackluster still. So lackluster here. Like this is not a good buying. This is not a good amount of buying right now. Something came in yesterday. The buying was bigger than the selling. We know that. Today, still low volume. We'll see how that ends by, it looks like for the end of the day. We'll look at the end of the day for that. Make sure if you're paying attention to volume, the most important thing is what it looks like at the end of the day. This is the one I'm really worried about, though. I think this one could give us some hints. So I might keep it up on my other tab here. All right, guys, it is 11:20 for me over here, so I gotta go get some lunch. Baby girl is waking up from her nap, so I will have to take off. I was trying to spend a good amount of time with you guys today. I think that was very fun, actually. I had a good time, and we were able to listen to some Trump stuff. IWM, we're looking for the same thing, by the way, just so you're aware. We are looking for a similar thing for IWM, which is some kind of trap up in these areas, maybe on the 30-minute chart. Okay, IWM and DIA, those are two I'd really be paying attention to. Right now, you have the yields reacting in an upward direction. And you have IWM trying to scale up because Trump just said, hey, we have to have those yields coming down. So this is what I'd be watching for IWM, some trap here for the 2-hour to pull back. Right, we're still keeping a level head here. We understand the risk of the yen carry trade. We understand the risk of this area. We understand it can continue, so we're not excited to short necessarily, but we will notice that the 2-hour needs to back off at some point. And that is a likely area in this type of move, right? As we approach the monthly expected move, as we get to the weekly expected move, as we maybe set a trap using our daily expected moves, we can see if something bad is going to cause us to pull back. We still, even if it's dramatic, as long as we are positive, as long as that daily chart is curled up for the SPY, I want to make sure to be thinking pullback. Pullback, 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 and then if signals prove me otherwise before that daily crosses, that's what we'll be watching. So can we check ARRY? Seems like a huge double bottom on the monthly. Yeah, we can look real quick. I don't mind. ARRY. Let's look real quick before I take off here. I mean, I don't know about the monthly, but the 30-minute, I like that. I like that. Some rapid selling that just stops on a dime and curls back up. You're seeing some volatility in it. So the 2-hour can cross up here. Now you do have 2-hour divergence at the high, and you have a 2-hour that was able to go a little negative. Now, when that crosses up, it will be positive. So there's a couple things you have to be open to here. One, this, right? One is this. This is kind of the lower high scenario, right, on the 2-hour. And I'm not talking badly about your monthly charts. I just want to give you like little things happening inside first. Now, if this is going to be a rapid move, well, this has proven to be pretty good resistance, hey, pretty good resistance. Above these levels, kind of scary. Above these levels, island reversal. So you would say this level right here, pretty damn important. So if we actually make a move there and you see the 2-hour cross back down, just be aware that that is some weak momentum at that point, especially if the move's a little bit quicker. The 30-minute, though, showing that divergence. So let's check on your monthly to see what you're seeing. Okay, potential for monthly double bottom here. You're not going to see it too well on these charts. What we can do is we can extend out to a weekly. We can look at the weekly here. And just kind of take this on a basic level because we don't have a lot of price action to look at these lows and look at the points of the MACD for it. So this point right here, pretty important to hold as that is the low. So we notice on the RSI, we are holding that low and you've made this little divergence here. So I think you do have an argument here. I would still be looking at this more from the investment side of things. And I think you have an argument for a reaction to maybe retest some key levels anywhere in these levels. But this would add some credibility to what you're thinking. But just note that, you know, this would not be like, oh yeah, I'm going to see a great option play right away. This seems like it will take a lot of time, right? It would take a long time for this to actually play out. Not a bad one though. Not a bad one to look at as far as I think investment side goes. I just don't know if solar is really going to be the big thing that people rotate to. Burn on these plays. Oh, that's unfortunate. But yeah, hopefully that helps you out in your thinking there. Maybe you can make a decision from that, guys. All right, guys, I know you guys are probably throwing out some more tickers. I can't look at the chat or else my ADHD will make me look at them. I genuinely do have to hop off. I do appreciate you guys being here today. We tried to give a good lengthy stream for you. And we will be coming out with a video tonight, so be looking for that YouTube video. I'm sorry we didn't put out one last night, but make sure you have notifications on. If you're not subscribed already, hey, what the heck you doing? Might as well subscribe. Give this channel a try for a week. And if you guys want to learn, just note that the course is going off of the sale in about 8 days. You have 8 days left to learn all of the stuff we're talking about around this weekly expected move, why we think a trap could set up here. You can learn really extensively why we believe that by taking the course, the full technical analysis course, for just $100 right now. It is 90% off, so go check that out. Thank you guys so much. I hope you guys are having a good day out there. I hope you guys have great trades going forward. As long as we're paying attention to the risk, maybe we can be rewarded. All right, peace out, guys. Later.